Good morning, everybody. Good morning, Cav. Good to see you today. Hope everybody's doing well. Termination Titan. I like that one. Good morning, Ron. Great to see you. Cav, hope everything's okay up there. You guys still have, well, obviously you have power. You're in the room. That's a good thing. Guys, welcome to the room. My name is Mark, and I am just a guy here teaching you how to make good decisions, I guess. Like your grandfather in the workshop saying, boy, don't do that. It's bad for you. This is an educational room. I'll never tell you when to enter the market. I won't even tell you how to manage your trades. But I will give you a plan that'll help you do just that, guys. So as we go through the day, just realize that everything that I do in this room is intended for education. And because it's education, it's imperative that it's a two-part process. It's me giving you the information, and it's you saying, "Hey, Mark, I don't quite understand what that information means. Can you clarify? Can you help me out? Can you give me just a little bit more to make sure I can follow what you're saying?" Um, every morning, whoop, wrong one. We go through and check news. I go to forexfactory.com/calendar. If you are in Nexgen Pro Trader funding, it is 100% prohibited to trade a minute before until a minute after. High impact news. Tonight at 9 p.m., guys, Trump's State of the Union qualifies as that high impact news. And yes, I will be sitting in front of my computer watching all of you semi-live traders, making sure that you're not in the market. One of the most ridiculous reasons to lose an account is just choosing not to check news every day. I check it, not because I'm with Nexgen Pro Trader Funding. Those jerks won't pay me like they pay you. Is news can disrupt the patterns that we're trading. News can mess up um, just the flow of the market, and we're all about the same thing every time. Everything that I teach is patterns, guys. Everything that I teach is identifiable. Everything that I teach is, I would say, predictable. It's something that you can study. Cheeseburger News at 10, I like it. It's something that you can verify and validate as true. So we're going to start with TradingView once again, like we did yesterday. I know I've got a lot of people in here working on TradingView. Everyone that was supposed to be in the room this morning, brand new, hasn't shown up, but that's okay. If you guys are with the funding company and you're using TradingView, I'm going to tell you right now what I'm about to teach you, even if you don't implement it perfectly. The little tricks that you're going to learn catching a trend trade, recognizing a trend trade, following rules for a trend trade in TradingView is going to absolutely change your life, I think. And just a heads up, so what we do in the first hour is the simple rules. It's the basic rules. It's the foundational rules. It's the rules that don't have too many moving parts. It's the rules that don't leave a lot of gray out there. And I would encourage you guys to learn the simple rules first. There's so much money to be made in the market. And when you have a solid foundation, it's pretty cool how easy it becomes to stay on the right side of things, how easy it becomes to no longer fight things. And it all comes from this very basic plan that I'm about to give you. Everybody in the room can simulate. Guys, give me a Y if you can hear me, please. I want to make sure that it's not just me. There it is. Ron can hear me. Smart aleck. Ron's the only one that can hear me. Nobody else in the room can hear me. Cool. I'll do a quick reboot on my end, and we'll have Pete do the same. Guys, give me just 1 second. I'm just going to knock it out with my task manager and then just come right back. So we'll see how that works. I don't know what it is about Discord first thing in the morning. It's like it needs its coffee too. All right, I'm on my way back. Here I come. All right, is that better, Pete? You got me? We good? Maybe, I hope. Fingers crossed. Robert Marks got me. I dig that. All right, guys. So everyone in the room can simulate and you can practice, and you don't have to be in a live account to learn these patterns. To be honest, you don't even have to be in a trade to learn these patterns. All of this is stuff that you can go back and study historically. As you're learning these rules, these very simple rules, as you're building this foundation, the first step in becoming a confident trader, ASAP, is just post in the room. Tell me what you did. Tell me what you saw. Tell me why you did it. And then my promise to you is that I'll give you feedback. I'll give you a personal session with me right there in the moment, private, just the two of us looking at your charts and talking about what you did. Now, sometimes you're going to get feedback and it's like, oh my gosh, that was perfect, great job, and that feels good. Let's be honest, everybody likes to feel like they did a good job. I'm going to tell you from personal experience, you will become a better trader by posting losers. You will become a better trader by showing me where things didn't go right, because what happens is it creates an opportunity for you to recognize it, and then for you to grow from that point. So don't hold back on posting in the room. And then guys, keep it simple. When we talk about the plans that I give you each and every day, let me go ahead and drop the trading view plan in there. Simplicity is the fewest moving part. Simplicity is the path of least resistance. So when we talk about the plan that I just dropped in the room, and the journal that I just dropped in the room, this is the KISS plan. This is the Keep It Simple Stupid plan. And this plan is a stepping stone in your learning journey. It's designed to teach you how to read indicators. This plan, the trades within it, are designed to optimize your chances of success, which means that if you're brand new, or let's be honest, if you're experienced and you keep taking 2 steps back and only 1 step forward, this is a great way to get you focused. Through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. But if you're really in this for the money and not the action, you will probably find that you don't need to write a plan that suits your needs. It's already been written for you. You just have to learn to adhere. Only 2 trades. There's a trend trade, which is what we're going to talk about. Shows you pictures of it. And then there's what's called a momentum trade. This is the second trade on the plan. And it is a trade that probably doesn't win as much as the trend trade. So we're focusing on the best of the best first. You've got to learn what it looks like to have these trades. You've got to learn what the pattern looks like so that you can identify your entry. And then today's battle cry is going to be great entries create very manageable trades. And management is where the money is made, guys. I focus heavily on entries. It's the management that's going to change the dynamic of everything you do. So I would encourage you, download the KISS plan that I just put in the room, and then download the journal that I gave you. And I'm going to start filling this up more. There's pictures of what it looks like to have a trend trade. This was just me studying, taking my own personal pictures. There's pictures of the momentum trade. There's ideas on management. Ideas on when not to take the next trade, whether it's long or short. There's a place for you to put your pictures. So as you begin to post in the room and the feedback is, hey, good morning, Alessandro. When the feedback is, hey, that's amazing, that's the best ever, make sure that gets into your plan. This is where your pictures go. And then finally is the trade tracking sheet, guys. And this is the second step to becoming a confident trader ASAP, is every time you present in my room, talk about what kind of trades you took. Talk about your wins and losses, right? Track your progress. But there is a notes section off to the side. Now, your notes might be different than my notes. And I'm going to tell you right now, when I'm sitting in this chair and I have no pressure of wins or losses, my notes may actually be more accurate than yours. Hey, good morning, Shush. Good to see you in here. I heard you were coming. We're about to get into Trading View. One of the things that you'll notice in the feedback is challenges that you may be having. And guys, we all have challenges in the beginning. We really do. So don't hide the challenges. Don't steer away from the misfortune and the losses, right? Losses are a wonderful thing. Good morning, Miss Lucy. Losses are how we learn not to take them anymore. Good morning, Shush. So here's one of the things that I want you guys to get in the habit of doing from day one. Um, and I can't stress how this will change your trajectory and how quickly you get to where it is you want to be. Man, it's good to have you here. You're on TradingView, right? Because we're about to go full tilt boogie into TradingView. Do me a favor. Interrupt me if you have questions, please. Interrupt me if something doesn't make sense. Because I've got all the time in the world. I am my own boss. As if you do this every morning, I'm going to wake up and I'm going to look at what I did yesterday. What worked? And I'm going to ask myself the same question to the other side of the coin. What didn't work? What I'm doing before I ever enter a trade is I'm saying these are the things that are bringing me success. And these are the things that seem to be pulling that success out of my tight little hands. Um, and what you're going to notice is the correlation between following rules, taking the right trades, and how effortless and easy it can feel, how there appears to be a lack of stress when you begin to trust your plan. And you'll notice that when you break your rules, when you knowingly break your rules, you're going to move stops faster and you're going to put stops where they don't belong and you're going to take profits where maybe there was no reason to take profits. Your brain knows what's right and you'll feel it. You'll feel it in sweaty palms and heart racing when you break your rules. Pay attention to this. Maybe even put notes on your chart about it. But if you do this every morning, it's going to prepare you for the day. It will accelerate the learning. And if you're really looking at the feedback provided to you in the room, it's going to set you up for success on that day. Because if your thing is trading in determination conditions, you're going to start your day going, okay, this is what I need to avoid to find my success. And if your thing is trading into whatever, HVA lines or fighting triggers or whatever it is, you start your day with a fresh look. Yes, this is what's going to be good, and this is what tends to not be good, and I'm going to focus on the things that are doing what they need to do. So this is your path, guys. This path has been consistent with Nexgen for the last 20 years. We've been teaching online in the rooms for nearly 20 years. We have been teaching day traders for almost 30 now. We started in 1998. This is nothing new for us. Everything that you're getting is an accumulation of tens of thousands of pictures and countless hours of study. We've done the work so you don't have to if you're willing to keep it nice and relaxed. So let's talk about what we're going to do. This is it. This is what we're going to talk about. We're going to talk about defining a trend, making sure that we're on the good side of the trend, and then we're going to develop the patience to wait for a fight within the trend. Guys, these happen all the time. You're going to see them, you can study them, you can recognize them. Your entries will come from where that fight is lost with the hope that the trend resumes. It's just a trend trade, and it's a down, up, down. That's all it is. It's just a pattern. You're going to have everything you need to identify when it's appropriate to enter on that pattern. We're going to use indicators, so we're going to use trigger lines on both charts. Trigger lines are two lines that work together. On your large chart, it only uses small triggers. They're kind of a fast-moving average. They kind of show the immediate strength of the market. And then on your small chart, you're going to use both small and large. You can do a comparison between these two to find momentum. But if I'm being 100% transparent and honest with you guys, you really don't even need those large triggers if all you're taking is trend trades. All you need to know is that you should never fight those small triggers. We're also going to use areas. Here's my blanket phrase, my disclaimer. Areas are bouncy. You're going to see different areas, and if you're used to just trading price action, it's going to feel like the chart is a little loud, a little noisy. Areas have names, so you're going to see one-to-ones. Magenta dots and yellow dots. These are 100% Fibonacci alternates. They're from different swing sizes, which is why they're different colors. In an uptrend, they can behave as resistance. In a downtrend, they can behave as support. Areas can create bounces, and since areas can create bounces, we're going to use them for targets. We're going to use them as what we call terminations, and a termination lets you know, hey, I've already gotten there. There's absolutely no trades right back into it. It's like having your nose to a wall. And then we're also going to use them for entries. We're going to use areas because areas create bounces, so you can use those for entries as well. There's divergence, highs and lows. Divergence, every time you see it, whether it's a cyan line from a low or a magenta line from a high, you'll see it come off of a pivot. Just say to yourself, hey, the market lost momentum here. The market is losing momentum. I know that it was pushing down, but right there at that exact point, the market started losing momentum. My software told me, same thing up top. These can create bounces as well. Horizontal lines on a chart can create bounces. But these aren't used for entries. These will only be used for targets. And you'll say to yourself, I refuse to trade directly into a divergence high or low because it can create a bounce. That's a termination. And then you're going to have outer bands. And I'm not sure if that's even how you spell outer. I'm pretty sure I took one over on spell check there. Outer bands are points of exhaustion. When the market's been trending, when it's been running, when it's been going, these are awesome targets. These are also terminations. No trades are taken into those outer bands because they can stop a trend. They can create a bounce. So we're going to use these for targets. We're going to use these for terminations, but we're not going to use an outer band for an entry. It's just not bouncy enough. Then you're going to see the mid band. It's an EMA, an exponential moving average, which feels really mathy. When it's magenta, it's down. It can behave as resistance. When it's green, it's up. It can behave as support. That's all you need to know. It's a line that can create a bounce. And when you put them all together on a chart, oh my gosh, look at all that stuff. How am I supposed to possibly read it? Pretty easy. If the market, these price bars, reach one of those lines, guess what? It can create a bounce. If you remember that, it can create a bounce that can upset the apple cart, that can take you out of a trade, that can stop forward progress. If you believe that from day one, you are already 90% ahead of most of the people in the world. So areas are bouncy. Is everybody good with that? Can you give me a Y in the room? If you're solid, feels good, not too stressful, right? If I see a line on a chart, I know it could stop the market. Awesome. We're going to use 2 time frames to define this one trade, guys. We're going to use a large chart and we're going to use a small chart. Your large chart is a 15-minute chart, and my goodness, there is so much that can happen in 15 minutes. It's not uncommon to see 100-point bars on a 15-minute chart. It's really too big and slow to refine entries, so we're going to use it to define the direction of the market so that we're always trading with the trend. We're going to use it to define momentum so that we know how fast that trend is pushing. You'll use that for management. We're going to use it for key targets. Looking for those bouncy things in the area, what a great place to get paid. And we're also going to use it for terminations when we're right there at the bouncy things, simply choosing not to take the next trade, but rather waiting for the clear path once again. All of this is a big, slow picture, not very difficult to read. We'll do a lot of reads on it. And then your entry chart is a 1-minute chart. This is going to define that fight that we spoke about. So if the market's in an uptrend, your fight's going to push down. We're going to use the 1 minute to define the immediate strength. That's those small triggers, letting you know which way the immediate strength of the market is going. And we're going to define entry points. We're going to define right where that fight is most likely to be lost. And this is going to become your entry. So your 1 minute chart is your entry chart. And we're entering because the large chart said, go find an entry. So let's break down the trend trade. Starting with trend and then each rule individually, guys. I tried to do, it's an educational method. It's called chunking. Learn a little bit, right? Learn one thing and then add the next thing. And eventually you have everything you need to find this trade. So we're going to start with defining the trend. The small triggers on the large chart will define the trend. It has nothing to do with background colors. It has nothing to do with higher highs and higher lows or lower highs and lower lows. Lower lows, that's funny. Lower lows, excuse me. It's really up or down. If your small triggers are going up on your large chart, you're in an uptrend. Only looking for rules to be met for long trades. And if you are looking at those small triggers and they're down, we're in a downtrend. You're only looking for rules to be met for short trades. So this is one of the easiest lessons you'll ever get. The market is either going up or going down. And if it feels like the market is going from left to right with those triggers, guess what? The people that control the market can't decide which way they want to go, which means you're going to have trouble taking a trend trade when no trend is really in place. So let them be decisive. Let them be vertical one way or the other. That's trend. Once we define trend and we commit to trading with that trend, it's time to make sure that we have room. Horizontal lines on a large chart can stop forward progress of a market. So rule number 1 says, when you enter the market, make sure you have room to them. So if the trend is up, from wherever that bar is trading, you need room to targets. There's got to be nothing in the way. No divergences, no outer bands, no mid bands, no one-to-ones, guys. Clear path is what we're going to call this. Is everybody good with that? This would be your initial large chart read. My trend is up, and look at it. I've got nothing in the way. That's our room to targets. That's rule number 1 met. And if you look at the large chart and the trend is up, and the market's already at one of those bouncy things, you don't have a clear path. Rule number 1 is not met. You're going to want to patiently wait until the path is clear. Can you guys give me a why if that's good? That's rule number 1. It'll take you maybe a second to say the triggers are up, and from where they are, I've got days of space to get to that next area. Do you guys see it? That's it. That's your whole large chart read. My triggers are up. Let's get market flow off of there. My triggers are up. Bunk. And from where I am, I've got nothing but room to get to that next spot. What's gold doing? Gold's like, let's go the other way, Mark. The triggers are down, but look, I'm right at trouble. No room. I have to sit on my hands and wait for a second. Does that make sense, guys? We just saw both sides of the coin here. What it looks like to have absolutely no room because we're at an area. What it looks like to have tons of room because we're days away from an area. That's rule number 1. You guys are going to be quiet today, huh? That's all right. Rule number 2 says that your 1 minute's not trading directly into areas. Why? Because areas can stop the freaking market. They can create a bounce. In order to really follow rule number 2, you're going to have to be able to understand rule number 3 as well, because not trading directly into areas is coming from the point where you enter the market. So we're going to learn entries, and it's the same thing. From wherever your entry is, make sure that you have room before you hit anything solid. Does that make sense? From wherever you enter, make sure there is room before you hit an area. And if there is no room, there is no trade. If this were a short trade, there is no room. Those one-to-ones are right there, and sure enough, they create a bounce. But from my entry, tons of room. And from my entry here, absolutely no room. And it really is that easy. From wherever I enter the market, there has to be room to make money. That's like 8 pictures, guys. I'm really trying to stress the importance of this one. Good morning, OG. So how do we know where the entry is? It's pretty easy. We're going to wait for the fight, right? So when the large chart says up or down, we're going to go up or down with it. We're going to make sure that there's room. And we're going to go define our entry and make sure that there's room. So what we're doing is we're defining the trend. On our smaller, faster chart, we're going to wait for that fight. Rule number 3 is going to put you in where the fight is most likely to be lost. Rule number 3 is going to help you reduce risk. Rule number 3 has a very specific look to it in order to enter the market. And it's going to be just like this, guys. For a long trade, your pullback, your fight begins when the small triggers roll down. So the large chart is going to say up, and those small triggers aren't going to turn down in the middle of your trade. So we're going up with them. Your small chart, you're going to see those small triggers go from up to down. This is the beginning of the pullback, the fight. Once that happens, I'm going to turn my attention lower. I'm going to look for an area, something to create a bounce. And then my entry will be an up bar, a green bar that finishes both corners above those small triggers. And the reason is these small triggers are the immediate strength of the market. And when I reach something that could create a bounce and the market closes above them, that's where the market is most likely to continue in the large chart direction. So there's a little bit of patience. This was from the triggers rolling, 1, 2, 3, only 4 minutes before the perfect entry. Over here, for a short trade, when the small triggers rolled up, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes before the market ever got to an area and gave us a close below. And guys, what happens is with this methodology, you will never wonder where your trade comes from. You will always be able to call your shots. And if you can develop the patience to wait for the fight and the close below, you can put yourself in a position to have a trade that all of you guys are proving wins more than it loses. So we go back and revisit. Pull back to the area, close below, and that's where you're going to incorporate room to targets to make sure that there's nothing in the way to create a bounce. Would you guys do me the amazing honor of letting me know that what I just said makes sense? In an uptrend, we wait for the fight right at the areas where the fight's likely to be lost, but we don't jump in until the market gives us a close above, making sure we have room to trouble. I love it. Why is that on there? I don't know. Oh, you know what we're going to do? Is we're going to look at it all together on 2 charts. So here we go. I love this. Because the small triggers are up, the trend is up. Because the small triggers are trying to turn down, and I don't know if they're up or down, I don't have jack squat to do. I'm going to let them decide. But on gold, they are decidedly down. That's the quick read. Because there's nothing in the way, I have room to targets. Then and only then do I turn my attention to the smaller, faster chart. And guys, this is what it's going to look like before you get an entry. And I think this is so important to picture that I added it in. The market is way up here and you're like, crap, they're going without me. I've done it. I've said it. And you're just going to say to yourself, my entry rules say buy a pullback at an area with a close above the small triggers. So while these guys are doing their best to go north, I'm putting boxes around areas because that's the only spot where a trend trade could happen. If I don't get those small triggers rolling down, I can't have a trend trade. If I don't get a fight back to that area, I don't have a trend trade, which means there's really one option. And guys, one of the most liberating, relaxing, wonderful feelings as a day trader is knowing exactly what has to happen to put you in the market and not worrying about everything that happens outside of that. The triggers are up. There's room to targets. Small triggers rolled. There's only one spot where this trade comes from. Now, the hardest thing that I've ever had to do in my life is absolutely nothing until it comes to this point, if it comes to this point. This is the highest probability trade that I can teach, guys. I'm going to tell you right now, a lot of you yahoos are going to start looking for ways to get the short to the long. A lot of you people are going to find more opportunity. But if you don't know where your rules met, easiest, highest probability trade comes from, you're going to struggle with the management, with getting there. This was from the classroom, and I think this was pretty cool. The triggers were down and there was room to trouble. And right about here, collectively in the room, we said, okay, where does our trade come from if the pullback happens? And we put a box. And that box, from the time we called it, was 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. 9 minutes before that entry ever happened. We knew exactly where it happened. And guys, I didn't move the box because I wanted you to see how you will call your shots. And once it closes below, down it goes. Pretty cool, right? Did you guys know that there's this much accuracy? Triggers are up. Room to trouble. Because the small triggers roll down, I wait for an area with a green bar above the triggers. Now here's where the market is going to try to hornswoggle and flim-flam you. That did not reach an area. It's important that you remember that trades come from areas, because that little up is kind of the buyers testing the water, but more often than not, they make that area. Don't get sucked into those middle of nowhere trades. Smalls are down, strong side, room to trouble. We'll talk about strong side. Since the small triggers rolled up, I wait for a pullback to an area with a down bar that closes below the small triggers. So what you guys will notice that there's the down bar below the triggers. My entry is on the next bar because I wait for that close. I wait for my timer to end, and when it does, I mash that sell button. I'm aware of all of the areas, and I get paid 710. Come off. And I've got nothing to lose because areas can create a bounce and undo your trade. Same thing. Triggers are down, only shorts. Room to targets, rule 1 met. Small chart room to trouble from entry point, rule 2 met. And guys, as the market comes down, I'm willing to get paid at trouble. I'm willing to take profits right at the thing that can create a bounce, because the goal of trading is to get paid. Now look at this. I can't even see how many bars are behind there, but that's 1, 2, 3, 4. Pull back to the area, no entry. 5th bar, pull back to the area, no entry. 6, 7, 8 minutes. 8 minutes to get my rules met. How calming is that? To not feel compelled to jump in, to be erratic, to be scared. Just simply waiting for that one pattern. Pull back to an area, close below. Pretty cool, right? So now we're going to talk management. Are there any questions about the trend trade pattern? Are there any questions about pullbacks to areas? Are there any questions about that close below? Whoop. Remember, guys, I can't see your faces. I thought I took a picture this morning of one. This was the one that I took this morning. It was down. I was the strong side of the triggers. It did pull back to an area, give a close below. And guys, look at that. The area that it traded into killed the trade, killed the perfect trade. But this happened this morning. The pattern repeats itself over and over and over. All you have to do is learn the pattern. So why do we do what we do? Because an uptrend means that the buyers are in control. And the buyers are in control on the small chart too. And what's the pullback? The pullback is literally the sellers fighting. The sellers telling the buyers, no, no more up. We don't want up. Guys, when the large chart says up, it's more likely to go up. We can define where their fight is most likely to lose. And guys, you can see where they fail. It's the pivot low. That's where the buyers took back over. It is not shush. We are not using limit orders because we have to wait for the close above the small triggers. Does that make sense? So you'll see a timer on the side. Let me see if I can do a live example for you. Triggers are down. This is actually pretty good. The market's pulling back to the mid-band. Do you see it? So first it's down. It's room to anything below. It's pulling back to the mid-band. So I'm literally watching this timer shush. And if I get a close, let me get paper trading up so that we can do this live. If I get a close below those small triggers, I'm going to mash this sell button. So I've got 7 seconds, 6 seconds, 5, 4, 3, 2, 1. That's right into an area, but that is how you'll time your entries. You'll wait for that close. You'll mash sell. I can't talk today. And this is where your small chart is most likely to get back in tune, back in line with a large chart. Now this one traded directly into one-to-ones, which could create a bounce, but that is exactly how you will time that out. Does that make sense? That was pretty fortunate to have that live right in the moment. So I just keep my finger over the sell button. But here's a great example. Do you guys see how those one-to-ones were right there? How there was absolutely no room to targets? And do you see what the market is doing immediately after? Rule number 2 is designed to keep you out of that, to keep you from taking that trade directly into something that could create this reaction. How aggravating would that be? To feel like you have the perfect trade only to watch it turn around. That's your safeguard. So that was kind of a good little look there. So same thing, sellers push down. That's what gets us to our entry. Closes above, that's what initiates the entry. And guys, we're going to use the idea of where the sellers fail and the buyers get back into control. This is going to be stop placement. So for a short trade, when the market pulls back to the area, when the market gives you the close below, your initial stop for this trend trade will be just above that pivot high, maybe 4 or 5 ticks, right? Little bit of breathing room. Because what we're saying is the buyers or the sellers were in control and the buyers fought, and we can pinpoint right where those buyers fought. And what we're saying is if they fight again, I don't know if they're bringing friends. So I'm going to put my stop just above where they lost last time. And in a downtrend, it's the exact same thing. Initial stops are placed below the pivot low, because if the sellers fight again, I have absolutely no idea how aggressive they're going to be, and I don't want to leave an enormous amount of risk on a trade. And then we made some pictures of that this morning as well. Let's see. I make pictures all day long, guys. That wasn't the one that I needed, though. Hold on. There we go. The sellers fight, or the sellers are in control. The buyers fight and fail. There's your initial stop. Because if the buyers fight again, I don't know how far past they're going to take that fight. So it's better to be stopped out than it is to take enormous losses. Does that make sense? Does anyone else feel that way? It's better to take a small little hickey from the perfect entry than it is to put a stop $1,000 away and just hope that shit doesn't get hit. Because Murphy says it's going to get hit. And then every time you get a push in a fight, you get a new pivot, you get a new failure. So even when you're holding for bigger moves, you can chase these pivots down and reduce risk throughout the trade. That's stop placement. That's initial stop placement. That's a little bit on the wise. Guys, stop placement is dependent on your grade entry. So let me show that picture that I wasn't going to show, but I should show right now. If your entry is that close below, right at the area, and you choose to jump in later, and you're like, oh, I'll get in 3 bars later into the move, that feels safe. Guys, it doesn't change your stop. All you've done is put a huge amount of risk on your trade, because stops belong where the buyers fail. And if you jump in all the way down here, it doesn't change where that stop belongs. Does that make sense? So this goes back to that phrase that I said earlier. Great entries create manageable trades. Great entries reduce risk. Great entries maximize profit potential. And the further you are from your great entry, the more difficult it's going to be to manage that trade, which is why we focus on entries so heavily. Guys, I don't talk about the money. The money is a byproduct of the process. Right now, we're just focusing on the process. So let's talk about support and resistance. When the market is moving up, any area reached, whether it's a zone, a one-to-one, a mid-band, an outer band, that area is resistance. Resistance is a ceiling. And the opposite is true. If the market is coming down, any area reached is an area of support. Support behaves as a floor, could stop the market, could create a bounce. Is everybody good with that concept? The difference between support and resistance. That one actually took me a minute. I kept messing it up as a brand new user. We're good? Awesome. Whatever you guys do, don't answer my questions, because then I'll believe that you understand or don't. So how do we define it when areas break? Well, the market is moving up and it reaches an area of resistance. That area of resistance could produce a bounce that pushes the market down. Same way it did right here. When a full body of a bar, when all four corners of that body finish above that area of resistance, resistance changes its role to support. And an area of support can stop a market that's pulling back. Guys, this is huge. This is the biggest mistake that new users make. So resistance, in order to become support, a full body of a bar must break above. And then when it pulls back, it is in fact support. Market is behaving as support, and when a full body of the bar closes below, it now becomes resistance. And you can see it right here, the pullback to resistance, and down it goes. So it takes a full body to change the role. Price reaches support, pushes to resistance, doesn't break, back to support, doesn't break, doesn't produce that full body. One of the biggest mistakes that new users make is believing that a close above an area changes its role. So you're going to have times where you're like, oh, I'm looking for a long trade. Instead of just believing that it's not my trade, I'll let the bar close above and just hope that things work out. Guys, all that is a prairie dog. That's peeking its head above resistance, and very often resistance creates that reaction. The same is true with tails. Tails don't change a role. Just because it gets below in the moment doesn't turn this into resistance. And you'll see this a lot. You'll see the sellers try to push and the buyers just tell them to get bent. And when the market finally closes the bar, it's very much support. So peeking your head below doesn't change the role either. Does that make sense, everybody? This is a great lesson that's going to pay huge dividends for you. Cool. So let's talk management. Once we get into a trade, right? Before we get into a trade, if great entries create manageable trades, management can be a decision that is already in play, that is already there. So this is how you're going to do it. And guys, I did put this PowerPoint in the room for you so that you can study it, take pictures, and ask questions. Direction of the triggers defines the trade. From this point right here, where I define my trend, here's a bigger picture of it. I'm going to ask, where is the current price, the highlighted price, the in the now moving price in relationship to those small triggers that are up that define my trend? And there's three options, guys. There is left, right, and center. That's it. Whether it's up or down, there is left, right, or center. If I am left of the triggers, up or down trend, I'm on what's called the strong side of the triggers. And this is where the highest momentum typically resides. This is where 1 minute areas are most likely to break. But we got a great example of that this morning. They're under no obligation to break, guys. So even though I'm on the strong side of triggers, left of the triggers, I don't believe this area is going to break. I believe wholeheartedly this area is going to stop the market. But it does have the potential. So I could reduce risk and wait and see if it breaks. And that's where bigger moves tend to come from. No reason to lose money into an area, though. The 1 minute area is likely to break, doesn't trump, or strong triggers don't trump the 1 minute area. If I'm to the right side of the triggers, below the triggers in an uptrend, above the triggers in a downtrend, this is the weak side of the triggers. This is where 1 minute areas, it's like the floor is lava, guys. This is where most of you are just going to get paid at the area and wait for the next trade. You're going to say, you know what? This thing is more likely to create a bounce. I'm going to make a couple $100. I'm going to GTFO. I'm going to wait for the next trade. When I'm in transition, this is where a lot of people are taking partial profits. And they're saying, all right, there's my first sign of trouble. I'm going to get paid at it. I'm going to go break even. And then I'll see if the market wants to run. Because, guys, in one bar, you can go from weak to transition to strong. In the 1 minute areas, those are where we're gauging where profits are taken. So by knowing where price is in relationship to these small triggers, it really sets you up a little bit to know how you're going to manage that trade. So good example, small triggers down, rules say only shorts. Prices on the strong side of the triggers. This look may produce bigger moves, but be aware of 1-minute areas. Think runner. And I've got room to target. So from my amazing entry on the pullback to the area inside of triggers, I recognize that this area could create a bounce. I recognize that this area could reverse the market. You'll notice that 4 out of 5 contracts come off right at that area that could produce trouble. And as the market tries to break below it, I say it's not obligated to break. I'm going to lock in. I'm going to make sure that I don't give money back. Because the reality is, guys, trading, we're doing this to get paid. We're doing this to get as much money in the account as we can without giving it back. That's the goal. So you've got to figure out your path of least resistance to make that happen the most often. Whoops, look at that. We're down $18,000. Ha, that's awesome. Simulator, who cares, right? It's simulator. Who cares? So guys, that is TradingView. Your plan tells you where to find your rules. Your plan teaches you how to read the 15-minute chart. Your plan gives you a checklist for entry, tells you where to put the first stop. Your spreadsheet that I gave you has pictures of what it looks like to have rules met. The spreadsheet that I gave you has a place for you to track your trades. One of the things that I promise new users every day, and I'm not going to stop doing it, is I will give you everything that you need to be successful with the software. I'll give you all the tools that you need to read these indicators. I'll hand you a plan that you can prove wins more than it loses. Now, the burden that is placed upon you is that you've got to learn the rules. Not just what they say, but also what they look like, what they mean. You've got to practice. Post in the room, use a coach. Guys, every top athlete in the world has somebody that sits on the sidelines and tells them how they could do it better. And then you've got to keep it simple. The plan that I give you is designed to optimize success. Guys, there's men and women in this room that have used that KISS plan to pass their evaluations, to reach their goals, to take it to semi-live. And once they get to semi-live, they're like, clearly I'm a badass. Let me abandon everything that brought me success. And then they go right back to blowing out. And they say, shit, I probably need that simplicity again. And they pass another evaluation with the perfect trades. And then they start chasing the money and they blow out. And guys, this is a cycle that happens until you learn to control your emotions. This helps you control the emotions because you know where everything is coming from. Gene, we've all been there. And if you say that you haven't been there, you're probably fibbing. I call it the 30-day stupid, Gene. I don't know if you've ever heard that story. I used to train management. Like, that was my gift in a previous life, is every time the company had new managers, it was my job to train them. And they flew in from all over the country. And the one thing I did for every manager is I handed them a checklist. And I said, so here's the deal. Here's where you need to be, what you need to do, why you need to do it. And if you just follow this, you're never going to have a bad day. And everybody follows it for about 30 days. And then right around day 30, everybody goes, wow, I have been so successful for 30 days. Clearly, I'm the smartest human to ever walk the earth. I don't need my checklist anymore. And for most of us guys, a new skill, 30 days is not enough to master it. And they abandon a checklist and they begin to struggle. And I used to see this repeatedly on some of the most gifted people I've ever worked with. And I see it in this room repeatedly with some of the most gifted people that I've ever worked with. So your cautionary tale. Don't get smarter than your checklist. Don't confuse what you see on the chart, your read, with the rules for a trade. It'll help with longevity. All right, you guys ready for Ninja Trader? Look at that, strong trending. I'll open up crude oil behind. And we're going to go and I'm going to do Ninja Trader now. Just because you didn't ask your question on TradingView doesn't mean that you can't ask your question on TradingView. So there is the PowerPoint that I'm going to teach from. Here is your NinjaTrader KISS plan. And here is your NinjaTrader tracking sheet. Everything you need to be successful. So what we're going to do is we're going to do the exact same thing. We're going to learn to read our charts so that we can identify a trend, so that we can wait for a fight, pinpoint where that fight is most likely to be lost, and hopefully the trend resumes. Hopefully, right? I'm not in control of that. The only thing I'm in control of is whether or not my rules are met. And I'm going to show you guys a good example of what I did this morning. I have no idea, Paul. Send him an email and ask him. I have no idea. None whatsoever. I wish that I did. Let me know what they say when you send them an email. So guys, same process. Take pictures, simulate, keep it simple, keep it focused. It's only 3 rules to find the highest probability trend trade. I've been teaching this trade for 6 years, guys. It only takes 3 rules. It takes 3 rules with no variations. It takes 3 rules with no amendments or addendums. It takes 3 rules, black and freaking white. A trade is momentum plus a clear path plus a defined entry point, guys. And when you have these 3 together, you have what we call the high probability trend trade. And this is a trade that typically wins 70 to 80% of the time. And this is a trade that creates confidence through the memory of success. And this is a trade that, yes, is predictable, is studyable, is provable. And it creates that edge that we're looking for. It only takes 2 charts to prove this rule true, or these rules true. There's a large chart and a small chart. Should sound familiar. Large chart, slow, defines direction, momentum, and areas. Small charts, fast, defines entry. Same as TradingView. It's just the same pattern on a different platform. People that are in charge, that's your large crowd. People that aren't in charge, that's the fighters. These guys win more than they do. Your rules are designed to keep you in line with them. We're going to use areas. Areas are bouncy. Have you guys heard that yet? Areas are bouncy. Areas can stop forward progress. Areas can make a market change direction. We're going to use triggers, small and large. We use small and large on both charts with NinjaTrader because it's faster. Fast moving average, 2 lines creating the small. Slow moving average, 2 lines creating the large. We're going to use these to define momentum. We're going to use these to define termination conditions, areas we shouldn't be taking the next trade into. We're going to use these large triggers to define beautiful entries, guys. Triggers show up in everything. Areas show up in everything except momentum. And it only takes 3 rules to get to the good stuff. That's it. 3 rules to get to the good stuff. So we're going to start with rule number 1. I'm going a little quicker because most of you have been with NinjaTrader for so long. This is just kind of a refresher course. If you need clarification, the same is true as it was on TradingView. Raise your hand. Otherwise, I'm going to go through this at a pretty good pace, guys. All we're doing is we're recognizing one pattern that you can prove wins more than it loses. That creates an edge. Rule number 1 says large chart must have strong trigger lines. Strong trigger lines have everything to do with trigger lines. Strong trigger lines have nothing to do with price bars. They have nothing to do with areas. And there's one look that is strong trigger lines. It's a separation between the small and large. So in an uptrend, when the background is green, both large and small triggers must be green as well. If your colors don't match one another, the trigger lines, if your trigger line colors don't match the background, you don't have rule number 1 met. There's no reason to go to rule number 2. Strong triggers is one look. When the smalls break above and away from the large triggers, that separation is strength. When the smalls break below and away from the large triggers, that separation is strength. Learn that phrase. Separation is strength. And when you have strength, the odds are favorable for the market to continue in the direction of the trend. You're going to see it annotated OFM on a lot of charts today. If there is no separation, there is no strength. If there is no strength, anything can happen up or down. Rule number 1 is not met. My NinjaTrader users, will you give me a why if you can allow it to be this simple? It either is or is not. And only one of them, only one thing takes you to rule number 2. I know you're like, Mark, it can't be that easy. I promise you guys, it really is. Because once you have momentum, the market's going to be hard to stop. Once you have momentum, you're even going to use that to look to break key areas. Once you have momentum, it's going to cover some of the mistakes that new users make. So we are cleared to go to rule number 2. It's a flow chart. If I have strong triggers, then I must not have termination conditions. What's a termination condition? Well, my brother's long-winded version is a termination condition is a Fibonacci-based indicator that has the potential to reverse the market. Oh my gosh. Horizontal lines on a big chart. Horizontal lines on a big chart can stop the market. Horizontal lines on a big chart are where the people in control make decisions, where the buyers buy, where the sellers sell, where fights happen. And you know about them long before the market gets there. And there's a very simple recipe to recognizing that you no longer have a clear path. And it starts, let price, your dynamic Renko bars, let price make it to an area of resistance. Let price make it to an area of support. And once price gets there, the decision-making process is put into motion. Price becomes irrelevant. You have to ask yourself, where are my triggers? Price reaches, where are my triggers? And if 0 trigger lines have made it through that area of resistance, that area of resistance is defined as a termination condition. And if 0 trigger lines make it through that area of support, that area of support is defined as a termination condition. Guys, it sounds too easy, doesn't it? If price reaches an area and 0 trigger lines make it through that area, your rules say absolutely no trades into that area. And if price reaches an area of support and 0 trigger lines make it through, your rules say absolutely no trades into that area. This is going to create a little bit of patience. But here's the truth about these termination conditions. One of 3 things will happen. It could break. Areas break all day long, but you don't know that it's going to break. It could set off a fight between the buyers and sellers that absolutely scramble your eggs for an hour, take all the money out of your account, leave you sitting under a bridge eating beans with a stick. You don't want that. Absolutely no trades. Or it could reverse the market completely. And guys, if one of those no triggers through termination conditions reverse the market completely, that's a strong top. That's what we call a strong bottom. And a strong top or bottom is the precursor to the sexiest trade you will ever take. And it's also rule number 1 for the second trade. Is everybody good with that? Price reaches, where are my triggers? None of the triggers break. It's okay to do nothing. Oh my gosh. Price reaches Fibonacci support. The triggers don't break. It's okay to do nothing. Weak triggers. Anything can happen from the middle of nowhere. It's okay to do nothing. Price reaches a fib. Triggers don't break. Look at the bounce. It's almost like they know where these areas are. It's almost like you guys know where they are before the market ever gets there. So here's a live read. I don't have momentum because there is no separation. My colors don't match. Good morning, Miss Cindy. And I don't have a clear path because none of my triggers have made it below support. Guys, can you give me a Y in the room? If you can say, yes, I get that. Any trades taken here are like financial suicide. I thought you were in Miami, Cindy. Awesome. So if it doesn't reverse, if it doesn't set off a fight, it means that it's breaking. But it's cold. What is it, like a brisk 73 down there? I bet you do, Cav. I saw Sarasota was 40 this morning. It was 29 here in southern Georgia. So guys, here's your cheat sheet. Price reaches a line. Who cares if it's a fib or a divergence high or a 1-to-1? Who cares? Price reaches a line. No triggers, no trades. Sit on your hands. Do nothing. Wait for the reaction. Don't try to predict it. You don't need to. The futures markets trade billions hourly. The S&P, which most of you are trading on NinjaTrader, exchanges about $174 million a day. It takes $400 a day to create a six-figure income. So no triggers, no trade. If it's really going to break, your small triggers are going to smash through that area. And with that momentum, it has the potential to break. But I'm going to give you a red number 2 because 2 triggers through is not going to optimize your chances of success. And 2 triggers through is not your best look for a potential break. And 2 triggers through is probably going to lose more than it wins. So we're going to do our best, like your grandmother holding you close. Keep you safe from yourself. When 3 triggers break through that area with momentum, when you get 2 smalls and 1 large, now that area's really got the potential to break. Now it's there, now it's looking good, now it's more likely to happen. The second trade on your plan is what we call a 50-50 trade. 50% of your triggers are through, 50% are not. This is a medium probability trade, which means that most of your indicators line up for the rules. However, an issue exists. Your issue is that you don't have a clear path yet, which means that it has to be managed assertively. There's a very, very specific set of rules for capitalizing on this trade. And once 4 trigger lines get through the area, resistance becomes support. The area is broken. The path is clear. Life is good. And your path remains clear until you reach the next area. And once you reach the next area, dang it all to heck, we go right back to number 1. So termination, potential, better potential. By the time this area breaks completely, 4 triggers through, do you guys see that price had already reached the next line? That we were right back into a termination condition, that our rules say absolutely no trades into that area? That's what the KISS plan says. Because more often than not, taking a trade into an area is going to result in a loser more often than it results in a winner, which means that you no longer have an edge, that you no longer have an advantage, that you're no longer in the good graces of the people that control the market. Clear path can come from a breakout where 4 triggers get through. Clear path can come from a reversal when there's nothing in the way from the reversal. The easiest trades that you will ever take will have both. The easiest trades, the highest probability trades, the best of the best trades, the boring as all get out waiting for this damn thing to set up trades you will ever take will have both momentum and clear path. And then you will buy or sell a pullback at an area inside of triggers on a smaller, faster chart, defining your perfect entry, taking a trade that you can prove wins more than it loses, creating an edge. So is everybody good? Momentum leads the way because it's hard to stop. No termination conditions, giving us a clear path, letting us know that there's nothing there to create a bounce. Here it comes, Pete. I share this picture every day. Guys, when you have momentum and path, I want you to start picturing this in your head. This is momentum. Triple dog dare you to step in front of it. This is a clear path. Unless you trip over your own feet, you're not going to hit anything for a while. This is the best of the best. Not the only way, but the best of the best. Once you have momentum and path, guys, you're going to define your entry. You're going to use a limit order to buy or sell a pullback in an area inside of triggers. That's the verbiage. I like that word, verbiage. Sounds like something out of the 80s, right? Go grab our verbiage, man. So verbiage becomes important as you learn rules. It's one thing to know what it says, right? You got to know what it looks like. So rule number 1, separation is strength. If you can't say separation, you don't have strength. Rule number 2, price reaches, no triggers, no trade. Keeps you out of trouble. Rule number 3, use the limit order to buy or sell a pullback, that little push that's against the large crowd, the large chart, and do it in an area. Fibs, midbands, or yellow 1-to-1s because areas are bouncy. But force those areas to be inside of triggers because triggers, specifically the large, will show you exactly where the market is most likely to retrace. It'll show you exactly where those areas need to be. It will even define where the market should not go. Learn this phrase, guys. You'll never miss your trade because it's just a pattern. Shush, right now you're thinking, he said don't use a limit order, right? Limit order with Ninja, yes sir. I saw you type it. I was like, I know exactly what he's thinking. I've been doing this a while. So guys, when the large chart says up, when the path is clear, I really can't stress enough how important it is to really have those first two to make these entries work more than they don't. The reversal bar in the small chart is the beginning of the pullback. It's not the entry. It's a little loss of momentum that says, hey, guess what? The fight is on. This is kind of the same thing as the triggers rolling on TradingView. Reversal bar, down bar, after all of these up bars signifies the beginning of the pullback. You'll be able to define where the pullback is most likely to retrace, where the retracement's most likely to go from the bottom to the top of the trigger lines. Anywhere in there is not off limits for the retracement. So it could retrace a little. It could retrace a lot. We're using these large trigger lines to define the retracement zone. But trigger lines, as much as they wish they were, they're not bouncy. We need an area. We need fibs, midbands, or yellow 1-to-1s inside of those trigger lines. And those are where the market is most likely to bounce and continue in the direction of the trade. But because our large chart is doing this bad boy, all the momentum, nothing in the way, your entry using a limit order, waiting for the fight, is the tick or two above that highest point of support closest to the reversal bar. And guys, this great entry is going to increase the distance to profit targets, which is always a nice thing. This great entry is also going to reduce risk because your initial stop in the KISS plan is placed about 5 ticks below those trigger lines where the market should not go. And that phrase becomes very important in management because if trigger lines define the retracement, if areas within define where it's most likely to bounce, when I get beyond all of that greatness, I no longer have an edge. I no longer have an advantage. I'm no longer in the loving embrace of rule number 3, letting me know that my entry is solid. Once you get, where is that picture? Once you get below these trigger lines, it's the wrong side. You don't know if, when, or where that market's going to continue up. So by defining where the market is most likely to continue, you've also defined where the market shouldn't go. Reversal bar begins the pullback. This is a downtrend. Trigger lines define where it's most likely to retrace. Areas inside define where it's most likely to bounce. So here we go again. I'm going to sell a pullback at an area inside of triggers. Guys, I know where it is before the market ever reverses. It's consistent. It's just a pattern. Anything beyond the triggers is not an entry. This is where the market shouldn't go. This is where my initial stop is placed. And when you put them together, large chart has momentum. Large chart has a clear path. The market's trading all the way up here on the large chart, and the fear of missing out is real. Reversal bar begins the pullback. I'm going to buy the market at an area inside of triggers. My expectation is that all that momentum with nothing in the way is going to carry me to the next area. This is what it looks like together. These tails on a large chart, we don't know if they're going to be tails or reversal bars, guys. They are most likely to be tails, and we are able to predict right where they're most likely to form by entering at the area inside of triggers. Now let me show you because I'm not just the president, I'm also a member. I did this morning, and I hope you guys enjoy it. With strong triggers, with a clear path, guys, I bought damn near the low tick, right at the area inside of triggers. Does everybody see it? And I'm never going to know what's going to happen next. I'm typing this out as I'm taking the trade. This is a pattern that I can study and prove wins more than it loses. This is an edge. So I focus on the process and I let probabilities do their thing. Now the KISS plan that I give you is very specific on management. When you talk about the KISS plan, and it was dropped in the room, let me open it up. You define your amazing entry. And the management in the KISS plan is designed to keep your emotions out of the trade, to show you where the market shouldn't go, to keep you focused on getting paid, because that's the goal. So most important, got paid. Amen. So when you take this great entry, it tells you to put your stop where the market shouldn't go. It tells you when to move it, and it tells you get paid at $100, dagnabbit. We're here to get paid. Go break even. Take 200 on the second. So I want you to see how this trade played out. There's my entry. Stop needed to be moved down where the market should not go. Without even producing a reversal bar. Because my entry was so damn good, I made $100 on my first contract and was break even before the bar ever finished printing. Guys, learning how to get paid. My worst case scenario on this trade now is $100. And that's what I got, was $100. And I've never stepped over $100 on the sidewalk. But here's the deal. The rules were still met for the trade. I chose to enter again. And now here's a little mental trick for you guys. You can take the P&L, the ticks, the currency, you can take it off and have absolutely nothing to look at. It won't show it to you up here. So now my trade, rules met, high probability, all the advantages, perfect entry. Now it's just a process of entry, which is complete. A process of management, which is mechanical and pragmatic. The process of targets, they're predetermined. There is no fear looking at the ticks. I don't see the market go against me or for me. All I do is follow a plan. Guys, if you are notorious for staring at ticks, this is a great trick, and I want you to see something. The market pulled all the way to the bottom of the retracement zone. It never went where the market should not go. All the way to the bottom gives me a reversal bar. The KISS plan says my new stop is 2 ticks below that reversal bar. Still nothing to do. Targets are where they were. Doesn't guarantee a winner. All it is a matter of my rules say, if I get a reversal bar, then I move my stop. If I hit my first target, then my stop is moved to break even. Why? Because I'm learning how to get paid. I'm learning how to trust that when the large chart looks like this, it's going to be hard to stop it. Nothing to lose. Second target's at $200. That's a $300 trade, guys. That's a $300 trade without emotion, without fear, without greed. All it was following a simple pattern and a simple plan. So when you put it all together, I annotated it for you. Strong bottom is a termination that reverses the market. Strong triggers, separation between the small and large. Clear path. Pull back to the area inside of triggers. Made money, went break even, but all the rules are met. In the beginning, you guys won't get back in because you're going to be like, whew, made $100. You're going to call your wives or husbands and high five them, and you're going to forget that the rules are still made. Morgan, are we talking about in general or on the automated system? No, sir. No tick down on the large one. Initial stop was where the market should not go. $300. Guys, that was a $400 moment over a couple minutes. and it followed the rules perfectly. And then here's the cool thing. With a little practice and confidence, you'll create your plan to get more out of these trades. You'll be able to say with all this momentum and path, that fib is the most likely spot. With all of this momentum and path, $100 doesn't always make sense. Maybe I'll get paid at the first sign of trouble and hold to the fibs, and magically your $300 trades become $400, $500, $600 trades. All from great entries, because great entries create very manageable trades. Guys, are there any questions? I thought it was pretty cool. I did everything that I teach this morning in a live market, annotated it, just for you guys. Does it work? Hell yeah, it works. But you've got to learn it. You've got to learn to work it. Work it. S&P. I have momentum. I don't have a clear path. Not even going to bother looking for an entry. Only 2 triggers through. That's pretty crappy for a break, and sure enough, it didn't. Right? No triggers through, market goes back up. Weak triggers at a fib, market goes back down. Only 2 triggers. You have been warned. That's crap. There's your big reaction. No triggers. Was that the bottom of a giant move? Yeah, it was. Where did that giant move start? Right at a termination condition. Look at what happens when support breaks. It behaves as resistance. Guys, every lesson that we have just talked about has played out in the market, because the market has a memory, because the market does the same thing every day. The market doesn't care about what you want. It doesn't know that you even exist. So you learn a pattern that creates an edge, and you focus on the process rather than the profits, because the profits are a byproduct of the process. You guys want to see something cool? I don't brag a lot in this room, but I'm going to do it this time. So yesterday, I said to myself, you know what? Apex has a crazy sale, 90% off. I'm going to buy a $250,000 account, and I'm going to trade the KISS plan for TradingView on my NinjaTrader lookalike. And we one day passed, guys, using the KISS plan, $15,145 over the course of about 6 hours. Trading a 10 lot, but the rules are exactly the same. I put it up against this picture. It's just a momentum trade from an HVA. Can you stomach a 10 lot? Most people can't. They hate looking at $1,600 worth of risk because they don't trust the process. Guys, your trades have nothing to do with the dollar amount. They have everything to do with the pattern. It's such an important lesson. That's my brag. That's like 32 flavors of kick-ass. That's 15 grand in a day. It can be done. Can you do it? Can you learn your rules? Can you trust your rules? Can you adhere to your rules? Ain't mad at me. I appreciate that. You guys want to know the other part of this? Is I'm human just like you, and I have days where I wallow in the stupid, where I make mistakes, where I've got to check myself and stop myself, because we're all human. So the more in tune you get with the idea that 2 triggers sucks, the less likely you are to lose this trade or that trade. There's one with 3 triggers. Price didn't reach the fib. Let's see what it looked like on a smaller, faster chart. Scrolling, scrolling, scrolling. Does anyone think it's a pullback to an area inside of triggers? Holy smokes. There's your pattern. There's your pattern. Now, a lot of you wouldn't have taken it because of all these divergences, but it's the same pattern. I bet you Pete has a picture where he got in right here and took it down to the fib. I bet you that picture's coming. So one of the things that I'm good at, and I'm not good at a lot, but one of the things that I'm good at is recognizing patterns, and more importantly, recognizing patterns in you. Things that are doing great stuff for you and things that are hurting you. So when you post in my room and you get feedback in my room, if you're on NinjaTrader, make sure you go back to the three rules, the three things that create the perfect trade, whether they're there or not. Get in the habit of going back to them. And if you're on TradingView, do the same thing. Do the same thing. It looks like 3 triggers through, but it is after the fact, Aaron. But it sure looks like 3. But again, in the moment, it might have been different. It may have been a different look in the moment, Aaron, because these things are constantly moving. So I don't suggest that it was perfect in the moment. But if I go back historically and I study these patterns, Aaron, do you think that's a good pattern to study? That it does seem to pull back to areas inside of triggers? That when it gets to the wrong side of the triggers, you don't know if, when, or where? Okay, so the 3 triggers weren't there. Alessandro verifies it. So Aaron, you were right. I was wrong. That's one of the things about historical study. It's hypothetical. There's too many moving parts, but you can still go back and learn those patterns. And that's why I tell you guys, like, go circle tails, learn the patterns, but make sure that you're getting reps in a live market, because it doesn't always look the same. Good eyes, Aaron. Thank you for backing me up on that, Alessandro. All right, guys, I'm going to take about 3, 4, 5, who knows, maybe 32 minutes. Not really. I'll be back, and when I come back, I'm going to click on every chart posted in this room, and we're going to go back to chart reads. We're going to go back to what's good, what's not good. Look at that. Momentum hasn't reached the fib. Did you guys know that there's only one line in there inside of the retracement zone? That's it. There's one line. And if I get a reversal bar before it hits a fib, oh, we're so close. That would be the one spot where a potential trend trade comes from. Oh, and because it hit the line, boom, I cancel my order. That's how quickly your chart reads can come, guys. It just takes practice. I'll be back in 5. You guys watch the S&P go crazy. All right, y'all, here we go. Second half of the classroom. Remember, I am not the trade police. I have no desire to be the trade police. I will never be the trade police, nor will I ever tell you when to exit, when to enter. I won't tell you how to trade, how many contracts to trade. My job, ladies and gentlemen, is to give you the ability to read indicators, to help you as you learn, to make sure that you understand the process so that you can get the most out of these amazing indicators. That's it. That's my whole role in the world. So I'm going to go through and I'm going to click on all of the pictures posted. We're going to talk about the good, the bad, and the ugly. Not really. We're going to talk about the 3 rules and what those 3 rules, whether or not they're met. And guys, I'm going to tell you right now, just because a rule isn't met does not mean that there's not a trade. Maybe it's not a trade for you, but it may be a trade for somebody else. Everybody's at a different level. Everybody has a different skill set. Everybody reads their charts. While you understand the advantage is the same, interpretations, the way you use them may be different. So resist the temptation to say, oh, Alessandro didn't follow a rule. He maybe followed his rules or whatever it may be. So got a pretty good lineup here. And we're going to get going. If you have a question about any of the charts, guys, feel free to ask. Remember that nobody in this room is obligated to share their plan with you. Nobody in this room is obligated to help you. Nobody in this room is obligated to return your DMs to hand you their trading plan. You can ask all day long, but if they say no, be respectful. So here's the first one. Jen's just asking a question about support and resistance. When this bar breaks below, support becomes resistance. When this bar breaks above, resistance becomes support. And Jen, that is perfect execution of the lesson. And this morning I looked at it and it confused me because I hadn't had coffee, but that is 100% perfect, spot on. And then when we talk about stops, so the triggers are down and Jen says, okay, here's my fight. There's my pivot high. There's my close below. Stop goes above it. We're doing a stop lesson here. And then Jen says, well, there's another pullback to an area and a close below. And that's my second pivot high. Awesome. Thank you for doing that, Paul. And Jen says, I didn't take this entry because I wasn't sure which pivot high to put the stop behind, pivot 1 or pivot 2. And I think I made a picture. I don't remember. I'll make another one. So guys, when the rules are met, when the market goes down, pulls up, and fails, that is one trade. That is rules met, 100% stop above the pivot high. Now, whatever happens next, we'll do a different color. The market continues down. It fights again, continues again. That's a completely different trade. Stop goes above the pivot high. And one of the cool things about this is you may get a market that just goes for days, right? You may get a market that is just strong trending, can't stop it, everything down, and it just goes. And you're like, I'm going to hold this bad boy until I get to the large chart area. You can use these pivots for initial stops on your trend trade. But as the market comes down and pushes up, you can also use these pivots for stop movement, protecting your investment, using the idea that that's where the buyers failed, giving you a line in the sand to put your stop behind. So, Jen, if you had taken the second trade, it's the pivot that creates your signal entry. Does that make sense? And for everybody, does that make sense? Stop placement's important. Good lesson there. Awesome. One of the greatest gifts you guys give me is a well-annotated chart, and I appreciate it. All right, market's trading down here, and Pete says, hey, Mark, I'm going counter trend. And I'm like, Pete, that is your right, brother. He doesn't have strong triggers against him. And guys, this is such an important part of what Pete does here. Um, not fighting those triggers. It's down. It's a clear path down. And Pete says, check it out, Mark. There's a pattern on a small chart. 3 divergences in the same price range is a termination condition on any chart, but you'll see it on a small chart first. And what it is it's this tiny chart showing you change that you can't see on a large chart yet. So Pete's like, all right, everything is down, and look at that. The buyers fought a little bit, but the seller said, no, we still want to go down. And the buyers fought again to test their resolve, and the seller said, no, Pete, we want it to go down. And then the buyer said, you know what? We just don't want you to get past this point. Here's your third divergence. Pete says, aha, and enters. He says the buyers are serious and looking for a push, and just, I love it. Quick little profits. Just little bingo, bango, bongos. Nice job. Guys, that's how chart reading builds a plan. That's how recognizing patterns within the market creates more opportunity. And all of it comes from the very simple, the very basics. Strong top. Do you guys notice only 2 triggers through here? 2 triggers with momentum. 1 divergence is a loss of momentum. Pete, we're going to use this one as an example. Going to make an example of you, Pete. Not really. But this goes back to why we learn to read those advantages first. And again, everybody's in a different spot. So I'm not telling Pete, damn it, Pete, why did you do this? What I'm saying is if you're always thinking about these 3 advantages, if you're always looking for these 3 advantages, if you let everything you do come back to these 3 advantages. Pete said, Mark, I had momentum. Probably shouldn't make that red. That feels negative, doesn't it? Let's go white. So you can see it. I had momentum. Momentum was there. Separation. Separation is strength. And then Pete said, it's only 2 triggers through. It's a 50-50. Now, I warn you guys every day that only 2 triggers through is pretty much crappy potential to break. It really is. For the new user, to keep you safe, I want you to believe that's crappy potential. Pete's been around long enough to say, yeah, but that was a strong top. I'll give it a shot. Now, here's where everything went south. Divergence is a loss of momentum. And if we're relying on momentum to break these areas, what we've done with that divergence is we've already sacrificed some of the momentum that it takes to break it. And then when a second divergence prints, you're like, crappy potential. Now the entry area was nice, right? But an entry area is a byproduct of advantages. And guys, divergence is the biggest killer of this trade. So if you're already up against the wall with only 2, and then you get divergence, especially, from a 1-to-1, that's pretty much the kiss of death already. And if you're still hell-bent on taking it, divergence from the same 1-to-1s, higher divergence, oh my gosh, this thing's not going to work. And there's really no reason to take such a big loss. And Pete, you probably could have been out of there almost break even. But this is where, and I don't know that Pete did it, but this is where hopium kills profits. The entry is freaking amazing, and it just barely missed his target. So guys, if your target is 10, but that nasty thing that can bounce the market is at 9, it's okay to take 90 bucks. It's all right. Like, it's okay to get paid at trouble. Medium probability, manage assertively. Pete, great lesson there. Thank you for that. Thank you for that. And this is why I don't worry about Pete. Because he'll find his way. With all the momentum, with 3 triggers through, Pete says, I'll jump the fudge in, make my money back. No worries. Guys, losers are where it happens. And Pete, if you go to take that same look tomorrow and you're like, whoa, divergence from the 1-to-1, I'm going to skip it, and it doesn't cost you $200, $300 to take that trade, then this classroom is paid for itself. Momentum and path, find a way. Absolutely beautiful. Momentum and path, find a way, but don't forget trend trades exist, right? Pete missed the trend trade, had to get some coffee, pet that cute dog that he owns, And he goes, whoa, I missed my trend trade. But with this look, I know what the expectation is. Once again, with all that momentum, I'll jump the fudge in, get paid, get out. I love it. Guys, this jump in trade is nothing that Nexgen teaches. This jump in trade is nothing that I've ever written a plan for. Actually, that's not true. I have when I studied it. That jump in trade, jump the fudge in. When I've got momentum and nothing in the way, the market's going to be hard to stop. I'm going to find a way to take quick profits and get out if the market tells me that momentum is over. Great job on that, Pete. It's called the chili dog, my friends. All right, Paul, good lesson here. I woke up, Paul, and this was the first chart that I saw, and it got my brain absolutely going into lesson mode. 15 minutes are up, strong side, room to trouble. This is the perfect chart read. The perfect chart read for the long trade. There is, in the uptrend, there's the fight, right to the area, close above the triggers, done flawlessly. And here's where it all went south. Price reached a 1 minute area. Stayed in due to strong side, and I don't disagree, right? It's got the highest chance to break from the strong side. But it could still create the bounce. And I'm not saying you had time to get, to break even. There probably wasn't a lot of room to break even. I might have with that look. But guys, there's nothing that says I'm relying on support to hold, right? And if support's going to hold and push that market up, I should be good somewhere behind support. And when it hits that area, it's okay to protect yourself. It's okay to reduce risk a little bit. You don't have to keep it behind that pivot low because you're already into the trade and at the first trouble spot. And Paul, I know you're going through the mechanics of stop placement and you're trying not to add too many variables, but guys, you gotta see those areas. Those areas can stop a market. Those areas can create bounces. Those areas can 100% destroy forward progress. And then Paul, it was very fortunate after the market gave us some pretty good lessons. Down strong room. Strong side doesn't mean that it will break. I'm still super aware of that area. And this is cool. The market says, Mark, you need pictures in succession for this. Could take the great entry, right? Trouble is the next area. Be aware this trade is too tight for me personally, but there's a good lesson there. And look what happens. It's okay to get paid there. And from 15 to 11, I tried to get that in there, 11 and a half. It's only about $85 worth of money, give or take. And I want you to see what the market did right off that area. Starts railing back up. Oh my gosh, no, maybe it's not going to go. And ultimately, the market continues back up because areas can stop the market. So if you guys are going to get in and you're going to get to these areas, it's all right. Slow it down, right? Pump the brakes, make some money, get some in the bank, protect yourself. Good job, Paul. It was a great trade. You just gave a little too much to those large triggers. And then, Paul, there was one other part of that that you couldn't see on your chart, which would be a little bit of a heads up too. Whoops, that's not it. And it was that the market had already reached its target. So in this uptrend, the market had already gotten to its target. It had already reached the zone. It had already started coming back off of it. So if it's already hit something, I'm even tighter on management, guys. If it's already coming off that top, I'm even more inclined to get paid at those areas and get to break even as soon as possible. Great lesson in there, Paul. Thank you. And then Pete, all the momentum, nothing in the way. Absolutely perfect. Jump in, get paid. And then your trailing stop failed you, Pete. That's a lot looser than you usually are. And it may have just gone fast and slipped. It looked like it might have. Usually it's all the way up here. So that 819, 819, that might have been just a big ugly spike. Got you slipped. That happens sometimes. I saw that. I was like, that's not Pete. And then I looked at the timestamps. I was like, yeah, we can't control that sometimes. The trend is up. The triggers are up. Price is on the strong side. Price pulls back to the area. What's your area? Victor, help me out on this one. What's the area that price pulled back to? Not an entry. Unless you're taking a momentum trade, HVAs are not entries. And this HVA didn't even exist in the moment. And this HVA had already been canceled out. Does that make sense? So HVAs are used for momentum style trades. They're not trend trade originators. It still worked out. You took a long trade from the HVA, no rules met, coming right off the area, and it worked out. So Victor, this is one of those times where I'm not afraid to say, dude, you got lucky. And man, great things happen to great people. But there's no real area. It's directly into trouble. The triggers aren't even strong to push. It's already been there and it held. A lot of challenges. And your large chart looks like it had already been there as well. So I'm glad you pulled one over on the trading gods there. Everything is down and strong. Pete jumps the fudge in. Pete, that is exactly where I think I called it too. And rides it down to trouble. Great job. Momentum and path. Momentum and path. One of the things you guys can do, and guys, I think this is important. Go back and when you write what you saw, make sure that it matches what you're seeing. Yeah, no worries, Paul. I got you, bud. Did I keep it, though? That's the question. There it is. All right. Great lesson, Paul. Thanks. That's all you heard. So the lesson here, Paul, was that just because you're on the strong side, it doesn't trump the small chart trouble. It doesn't change the fact that there's an area that could stop the market in front of you. So even though it's more likely to break, every time you trade into trouble and you see that trouble, it's okay to believe that trouble has the ability to absolutely kill your trade. And let me find the picture as well. Maybe I have it over here. So it's the perfect trend trade, right? It's the perfect entry. You had room to trouble. And when it got there, you didn't believe it. Where do I make the decision to cut losses? So that's kind of what we talked about as we go through. And let's not even talk about cutting losses, right? So the first part of it, and this you couldn't see on your chart, is the market had already been where it was going, which doesn't change the rules at all, Paul. What it does is it just gets me a little more aware. It's coming from a termination. It's not like it's its first run to it. But you get in, and it's a beautiful entry, and the market gets to that first area that could create a bounce, right? So, Paul, your initial stop is right here, below the pivot. Absolutely perfect. Couldn't do it any better. But when I hit something solid, right, and my brain instantly says that area could stop the market. That's what areas do. Paul, maybe not full risk, right? Maybe I'll just reduce it. I'm expecting these areas of support to hold if this trend trade is going to be successful. I'm far enough away from my entry. I've already hit trouble. I'm just going to hide behind it. And if they come get me, cool. You know, they earned it, right? But directly into the area, that's the big one. I'm not doing this if it's clear skies. Does that make sense? If it's absolutely nothing in the way, that zone doesn't exist, I'm not tightening up. Hell no, let it run. It's the perfect trade. But the second it hits, it's no longer the perfect trade. When it closes back below the small triggers, it's definitely not the perfect trade. And see that up bar right there where they tried one more time? It's another spot, maybe to put stops behind. And then they just can't get through. But it's the impact on the zone above you. That's where you change your ideas. If it hits that area and that area doesn't just break, just doesn't let go instantly, my ears prick up a little bit. And then I did the same thing here for a lesson. You know, if I take the short trade, just because I'm on the strong side doesn't mean that green line is obligated to break. So I take my entry, but I'm super aware of that line because lines can create bounces. And when I get there, that's where first profits make sense, right? The goal is to get paid. Even from the strong side, the goal is to get paid, even if it's only 90 bucks on the contract. And I think what I did on this one is it hit and didn't fill, so I reduced risk. Instead of keeping it way back here, I'm already $180 into the trade. I'll go behind my entry bar. And I left 260 on it. And they took all 260 from me. But because I knew that was there, I didn't hope. I just said, hey, that thing could create a bounce. I'm cool with 260. It was a good look. Just didn't work. $260 loss doesn't faze me. Not even a little bit. You guys will get to that point. Trading 10 lots, when you lose 1,600, that'll change your life a little bit in the beginning. Alessandro, all triggers true. Does that mean they're all red? Strong triggers. Room. This is the momentum style entry, which is perfect. You get paid at the first sign of trouble, and then you get paid too. Man. Alessandro, great trade. This pullback right here to the midband is the perfect, as has been taught for decades, next-gen momentum trade. And you nailed it. And then who am I looking at here? 15-minute, 1 minute. Gene, this is you, right? Triggers up. Room to trouble. Pull back to the area. There's your close above. Gene, did you get both corners above those small triggers? It's hard to tell because your box is on it. And I know it sounds ridiculous. And it doesn't seem like it should be an issue. Gene, are you in here? Well, this is for everybody in TradingView. It really, you're like, oh, what's it matter? It's one corner. Whoops. It's amazing how much it matters. And I don't know why, but it's a pattern I've recognized. If both corners don't close above, it's not an entry. And I can't tell if that one did or not. I'm going to assume that it did because you took your entry. It looks like it probably did. And then it just didn't work. Stop behind. And sometimes trades don't work, guys. Sometimes beautiful trades don't work. And that would be an example. It's a good trade. It didn't work. And then, guys, look, it had already been there. It had already gotten where it was going. And when it got there, it gave a pivot stop out at 1-to-1s with a full reversal and odds favorable momentum. That's got to get your ears pricking up. It's already been there. It's turned around. It's as strong as I've ever seen it. This is where I think we can exercise our right to force the small chart to slow down. And Gene, I hope that all made sense, and I'm not sure he's even still in here. But if it's already been there, what was the reaction? It'll tell you what they want. All the momentum down. Well, strong trending market, nothing coming easy. They have to work for every tick. Strong top, little hiccup with the smalls. continued down, broke prior divergence. So we're looking over here. First trade, bad entry, immediate reverse, stopped out. Market comes back down. I like this. You're like, everything says down. Guys, this is a good chart read. But Pete, this is you, right? Yeah. Pete doesn't just jump in. Pete says, let me get my immediate strength pointing in the direction I want to go. And man, that is such a good, great patience piece. And then he's like, I'm going to get paid because that's my job. But I'm going to get back in because now we're starting to get a clear path. And he gets paid again. Nicely done, Pete. Little mistake, great recovery. Looks like you're missing a one-to-one. Alessandro, because they're here and not here, right? You're like, where are my one-to-ones? Is that what you're wondering? Cool. So here, I've got good news for you. The one-to-ones here are only from this chart. They have nothing to do with the big chart. The divergences here are only from small chart movement, have nothing to do with the big chart. So both one-to-ones and divergences won't always line up. So you're good. You are good to go, my friend. Managed to hit objective despite the market fighting you all day. That's good. Got out a tick before trouble. Was too fast. Clear trouble, get in, and then out at trouble. Great job. I mean, that's it. And when the market is absolutely screaming, sometimes it moves more. But guys, this is all the momentum, nothing in the way. And just get in and get out. Make money. Great job, Alessandro. And there it is again. Everything says up, nothing in the way. So the challenge here, Pete, here's part of the fight making your life difficult. Is if you guys are going to jump the fudge in, don't jump the fudge in below the small triggers. You're on the wrong side of them. If you're going to jump the fudge in, make sure you're on the good side of those triggers. Because when you're below them, the market won't even continue up until they get to the other side of them. Was counting on a bounce from the mid-band, but you never let it get there, and it did. It saved you. That's okay. It's lessons for everybody is what it is. And again, Pete, I don't really worry about you. You know your plan. All right, Alessandro, I can't do anything with this one, brother. You say all triggers true. I don't know what all triggers true means. Because you don't have momentum, but you do have a clear path. You do have momentum on the small chart. And I don't know why you held. I'm glad you got paid. But without momentum to push the market, you sat through a big, ugly retracement with no areas inside of triggers. And I'm not sure why. I'd love to hear what all triggers true means for you. Termination, full reversal, odds favorable, and then off the termination, placed a limit at the mid-band. Not inside of triggers, just making up rules a little bit. And sure enough, the market goes down. Good job, Cav. Weak top, all triggers through, pull back to the area. Initial stop where the market shouldn't go. Market goes down, first target reached, break even on the second. Perfect, great management. Nathan, is that you? It's perfect. Get paid, it fails, no worries. It's nice to get paid, isn't it? As all four under the potential stop, ES too fast to look at everything at the same time. That's okay, but Alessandro, where was your chart? Did I lose it? That's not momentum. And what you're doing is you're hoping momentum pushes the market down that isn't there. And that's where these big retracements come from. And if it's too fast, it's just too fast. It happens. All right. Weak top. All the momentum, nothing in the way. And man, that's some quick reaction. Pulls back to the area. 6-point stop, so waited for confirmation. You never got it though, Nathan. Confirmation means the full bar prints. Confirmation doesn't mean that the bar starts. So you didn't wait for confirmation, right? It doesn't matter. You didn't wait for confirmation. This is what I want you to get out of it. If you're going to type it on the chart, make sure that it's true. Otherwise, you begin to believe your own stuff. Jumped in. There you go. Jumped in as it headed the direction I wanted it to go. That's the annotation. Because, Nathan, then you don't confuse jumping in with confirmation. Because there's no reason that market had to go down from there. It could have very easily gone all the way up to the top of the retracement zone. Does that make sense? And then it does everything momentum suggests. Took both targets, 2 points due to late entry. Cool. So you changed your plan 100% in the moment. You didn't enter at the area inside of triggers. You didn't follow your KISS plan. But because you leaned on momentum and path, things worked out for you. All right, that's our first round. Let's find some more, guys. Oh, Ron's got the skull and crossbones working. Uh-oh. Cav's been busy. We got Alessandro. I think that was just your question, though, Alessandro. All right, let's see what we got. Good bottom. Clear path. I see an entry over here. I don't know why. There's a stop. Jumping in right into trouble. But momentum is there and it works out. All right. So, Cav, are you done with the KISS plan and trying trend trades? And again, you do whatever you want. But when someone declares publicly, I'm only going to take KISS plan trend trades, I'm obligated to point out that you did not. Right, Nathan? Recognize Miss Cindy's charts. Odds favorable, 3 triggers, no divergence, perfect entry, making money, protected the stop because NASDAQ is fast. Great trade, Miss Cindy. Strong triggers, nothing in the way, pull back to the area, making money, protecting stops because NASDAQ is fast. Great trade, Miss Cindy. Momentum and path, guys. It's ridiculous how effective that combination can be. Went chili dogging on the first turn, hit the button, CDB, then went counter. Rode the trend up to the fib, and when it hit the fib, just went the other direction. Nice one, Ron. There's this mentality that hits a little later in life. Well, if I can't go up anymore, I might as well try to go down to the next spot for up. Guys, you got to be quick for stuff like that. When it works, it looks awesome. When it doesn't work, it feels silly. There we go, Cav. All the momentum, nothing in the way. Pull back to the area, easy money. That's what I'm talking about, Cav. That's the easy one. It's smooth, like pudding. Great job. There it is again. All the momentum. 3 triggers through. Pull back to the area. It doesn't have to be hard, right, Cav? It doesn't have to be hard. This is where I encourage you guys to ask yourselves, is that really your trade? Is that really how you're going to make your millions? Doing weird things outside of triggers, hoping shit works out? Or can it be effortless? Can it be easy? We all go through this process of realizing that we don't have to be as risky as we thought we were. Alessandro, that was the one-to-one question. Termination, full reversal, odds favorable, pull back to the area inside of triggers, money, money. Nathan. Nice. I love it. Jason says we request him from JN and Traders Chat. He'll send it. Right on. This is what I love. So check this out. Nathan, are you in California? Is that right? Momentum and path. Pull back to an area inside of triggers. Momentum and path from the blizzardy Massachusetts. Pull back to the area inside of triggers. Momentum and path. Pull back to the area inside of triggers. Momentum and path. Pull back to the area inside of triggers. From freezing frigid Miami. Momentum and path. Pull back to the area inside of triggers. Hold on. Momentum and path. Pull back to the area inside of triggers right from the great state of Georgia. Guys, it doesn't matter where you are. It doesn't matter who you are. It doesn't matter what you know, what you don't know. It doesn't matter if you're good at math or a numbers person. All we're doing is learning a pattern. A pattern that you can say, this pattern wins more than it loses. Only 2 triggers through. Divergence, divergence. Guys, if this goes down, it's not my money. You guys know I'm not a math guy at all. I can't program indicators. You too, Cav. Stay safe up there, man. I don't understand the numbers behind all of this, but I'm really good at patterns. Pretty artsy-fartsy. And I know that when this happens, that's probably not breaking. So I don't take the entry and I don't take the loss and I keep the powder dry, as the kids say. So focus on the process. So who's new in here? Shush, are you still here? Focus on the process, right? The money is a byproduct of the process that yields results. Lucy, focus on the process. Focus on learning the basics. Focus on finding the best. The money comes when the process is effortless. Great entries create manageable trades. Here's the entry that Nathan just showed us. Momentum and path. And here's one of the great things. Nathan, you took 300 on this trade, right? There's 3 things that you guys will learn when you focus on reading your indicators. You'll understand where the market is like to continue with the trend. That becomes your entry. You'll also learn where the market is likely to go with those advantages. Nathan, can you imagine tacking another 3 or 4 points onto that trade because you trust the look? And then you also know when the market may stop, keeping you from giving it all back. Guys, one of the great things about what we do is the KISS plan is so basic. Once you learn and you begin to trust, it's crazy how quickly you can begin to capitalize. Small's above the large, large or wide. Is it 4 triggers through? Judgment call, right, Nathan? Is it high probability or is it medium probability? Well, they're waggling. I've got one area inside of triggers. And how about this? The tiebreaker is if divergence prints, I won't consider it. But if divergence doesn't print, I'm getting in at the area and putting my stop where the market shouldn't go. Well, if it's 3 through, it's a bad bottom, right? But if it's 4 through, the bad bottom doesn't matter. So I have to know what kind of trade I'm taking so I can follow my rules. My rules say with 4 triggers through, take the trade. My rules say with 3 triggers through from a weak bottom, don't. I better know the difference, right? And if I'm going to be forced to make a judgment call, Can divergence be the tiebreaker? My judgment will say 4 triggers if there's no divergent. My judgment will say 3 triggers if divergence prints, and I'll cancel the order. See how that works? I know that it could go either way, so I'm going to err. Well, now it's 4. Now I just dare them to come back and get me. Momentum, 4 triggers through, tons of room to 95. I just need a reversal bar, and I'm hoping this divergence gives it to me. I'm hoping that divergence is enough to push that market down to my area inside of triggers. Does this make sense, everybody? This is what it looks like. The one thing we're not in control of is whether or not that market comes back. See how the mid-band keeps moving up as it keeps moving up? Now I've also got 1-to-1s right here. I could choose to get in just above those 1-to-1s. Area inside of triggers, right? It's a lot of risk. Do I accept the risk with the perfect look? Yeah, let's see what happens. Watch this. When you get a little better, you'll say if they blow through the 1-to-1s, I'll get in just above the mid-band too. I'll add on to my position. Let's see what happens. All right, there's our first one. So if the 1-to-1s go, I'll just cancel the other. Oop, there's our second entry. Hold on, stop goes where the market should not. That's a lot of risk. That's a 4 lot, isn't it? Egads. If I get a reversal bar, then I'll reduce my risk behind that reversal bar. If I don't get a reversal bar and they come stop me out, guess what? I lost. That's a cost of doing business. I'm winning. I'm losing. I'm losing. I'm winning. I'm winning. I'm winning more. Oh, this is also. Oh, no. No. Yes. No. Don't get caught up in the ticks, guys. Get caught up in the process. It either goes or doesn't. Who cares? I'm on simulator, right? Doesn't affect my life. I could just take 1,000,000 of them right there. Who cares? It's the same pattern. My stop goes in the same spot. My targets are in the same spot. This is simulator. This money is not going to win me friends. There's my reversal bar. I choose to reduce risk below the reversal bar. If they hit my first target, I'll go break even. If they don't, they're going to stop me out for 3 grand of simulated money. I do have momentum. I do have a clear path. Oh, look at it go. You can do it. So what's changed? Look, now I'm above the small triggers. All of my indicators are going. Come on, you can do it. It tapped it but didn't fill it. I'm going to keep my stop because technically I didn't take profits. It's going to be funny if we lose this one, right? Still have momentum and path. All my indicators are pointing up. Price is staying above those small triggers. That's nice. Get up there. Come on, I'm teaching a live class. They're trying. You don't want to lose? Then you shouldn't be day trading. Losses are a part of it. You will lose trades, guys. I don't care who you are or how good you are. You will lose trades. If you're not okay with the idea of taking a loss, if you can't stomach losing trades, guys, day trading is going to rip you apart. It's going to tear you up and spit you out, and you're going to have ulcers and anxiety and bald spots and gray hair. Because if you're watching those ticks go up and down, you're going nuts. Look at all that momentum. Did they tap it again? Those jackasses. I'm telling you right now, I'm not in control. The only thing I can control is the entry. And of course, we took 32 entries after it to prove that simulator doesn't mean anything. It doesn't change where I put my stop. It doesn't change where my targets are. It doesn't change the conditions that got me in. That'll drive you nuts, won't it? How many of you would have already closed this out? All it's doing is retracing back to areas inside of triggers. That's all it is. Uh-oh. Uh-oh. Here they come. They're coming to get us. They're coming to get us. Maybe they're not. Who knows? I don't even have to watch it. It can either go or not. I don't care. It's simulator. Boaz, everything is up, pulls back to the area, closes above, and Boaz takes the perfect trend trade. Good morning, Andy. That is beautiful, Boaz. That is, look at how long he had to wait for his entry. You took the first one, and you had to go twice. They fought again. Great job. Did we get it yet? Come on, guys. Just tap it. And then I'll go break even. They're trying, aren't they? Now a second lower divergence will probably kill this trade. I do have a new pivot. I'll go 2 ticks below it. So now you're only risking $1,200. Great trade, Boaz. 15 up, transition not clear. Nice trend trade setup. There's the pullback. There's the close above. What wasn't clear? Was it in the zone? Looks like it would have been all right. Nice one, Paul. There it is again. Same trend trade. Everybody's catching it. Oh, I think I just heard target filled. Look at that. So we're break even. Pretty cool, right? 36 contracts off. And second target filled. So guys, this is 2 today. High probability trend trades for the win. And look at that. It went right to the divergence high. $6,000 doesn't make me popular, guys. It's just because I tapped on the buy button a million times. 2 contracts is all it takes to learn this pattern. 2 contracts is all it takes to learn this pattern. Couple months is what it takes to trust it. Same trade on TV. And then momentum, strong trending market, buy the mid-band until it works, buy the mid-band until it doesn't work. My computer was down, not my money. That's okay. Nathan, does weak bottom matter if it's 4 triggers through? So we have strong triggers. Yes, it was a weak bottom. But who cares? I had momentum and path. I had the perfect entry. Never went where the market shouldn't. Never got back below the perfect entry, right? I love a strong top or bottom, but it's not mandatory. Yep, perfect. 2 triggers through, not a strong bottom. Good job. Good read. All right, momentum is long, pulls back to the area, closes above, and Andy does the same trade. Everybody's taking the same trade. All the cool kids are waiting for the fight, getting in on the good side of the triggers, and you guys appear to be making a lot of money. Nicely done, everybody in this room. So if you're not there yet, let's talk about something, and then I'm going to take just a minute. If you're brand new, so Lucy and Shush and maybe Terry Kano, if you're new in here and you're watching people make money, you are probably driving yourself nuts wishing that you were. Let me show you something. It's simulator. It doesn't matter. It's gone. I didn't make anything. All I got was the great lesson. With momentum, with a clear path, buy the area inside of triggers. That's the lesson. It has nothing to do with money. Momentum has nothing to do with your profits. Clear path has nothing to do with your new car, pull back to an area inside of triggers, has nothing to do with your Barbie dream house, right, Andy? But when you learn the pattern, eventually you can turn that simulated money into a live environment. And then you see if you can sit still in a trade long enough to let it produce. That's the hard part. When I was a brand new user, when I was a young warthog, you guys want to see something? Full admission of guilt here. Because I want you guys to feel human. And I don't want you to be bummed about things that you do. I would take this entry. I believed in this entry. I loved this entry. I was so convinced that this entry was such a great entry that I never missed it. And from this great entry, when the market got right here, I was so absolutely terrified of losing that I would go break even plus a tick. And the market would stop me out, and I would be down money in commissions, and then it would do everything the indicator said that it would. Guys, management is where the money is made, and I don't know if I'm the only one that ever did this. I'll take the perfect trade and convince myself that with all of this momentum and path, these one-to-ones are capable of stopping it. And I'll take the perfect trade and I'll convince myself that one divergence is enough to ruin everything great going on my big chart. And guys, you see this a lot where you just don't trust it yet. And that's okay. You will learn to trust it through repetition. You'll learn to trust it through time, through practice, through simulation, through feedback. But if you're always chasing the money and not the process, you're probably going to struggle. So Nathan, you chose to get it at the high point. If a fib stops printing, the fib is done. Yeah, you got it at the high point. Perfect. No, you followed the rules 100%. Were you watching in the room where we said there were 2 areas for entry, but that was the first one? You were probably trading, which is good. You should be paying attention. So what we did is we put one there, and we put one at the midband, and we said, you know what? If the one-to-ones don't stop it, the midband's the next spot. So we had 2 and 2, and then I just stomped on the buy button 34 times to prove that simulator money doesn't change anything. So yeah, perfect. 100% perfect. That fib is, who cares? If it's not printing, yeah. So no, don't change your words. Change your words, Nathan. Oh, I'm going to drive you crazy. Are you ready? No, that's okay. If the first entry doesn't work, is it okay to take the second? Nathan, your rules say buy a pullback at an area inside of triggers. It has nothing to do with it being a mid-band. Is it an area inside of triggers? Just as valid. Just as valid as this one. So this trade is every bit as valid as this trade. And Nathan, there's people in the world that'll take half of their contracts entering here and the second half of their contracts entering here. And did you see the trade that I took this morning where I took the perfect entry at the area inside of triggers? I chose to skip the one-to-ones. I got paid before the reversal bar, got taken out break even, and then I just re-entered at the area inside of triggers. Just happened that way, Nathan. I don't have a reason. It just happened that way. It wasn't intentional. This was me not giving two craps about the money, just the process, pull back to an area inside of triggers. And I knew that I was going to make a series of pictures for you guys. But that's the one that's pertinent for you, right there. This is still an area inside of triggers. This is still a rules-based trade. So even though I took the first one, got stopped out, break even, it doesn't change the fact that this is the perfect trade. And the same would be true here, Nathan. If you didn't catch this one at the area inside of triggers, is there any reason you couldn't catch that one, the area inside of triggers? It's like second chance. It's like the market literally says, holy crap, I forgot the Nexgen users. Let me go pick them up at an area inside of triggers so they can make all the money. But the rules are exactly the same. They're met 100% exactly the same. Whether it is there, hold on, let's do this. Whether it is there or whether it is there. This market, literally grave. What is the right spot, Nathan? Is it the area inside of triggers? Buy or sell a pullback to an area inside of triggers. Buy or sell a pullback at area inside of triggers. Why do we get in at the top of the zone? Okay. Why do we get in at the top? Let's do this. This is a good lesson. Dang it. Hold on. You get that off of there. Get these off of here. You're going to like this. See? This is what happens when you sleep in California time. You never hear this lesson. We get in at the top because of momentum and path. We get in at the highest point because when it's a high probability trend trade and it is the absolute perfect trade, this market is screaming, right? I don't know that they're going to push deep, but I know that they could. That's why it's the highest point. This is for new users, Nathan, so you guys don't miss trades. The KISS plan keeps you from missing trades because the large chart is screaming so much. There's no obligation for them to go here. But the typical new user will always go lower because they don't like the risk from the higher spot. Does that make sense? Does that feel, everybody in the room feel pretty much what you do? I'd rather go from here because it's less risk. But once you get in here, it can go all the way down to here, no matter where you get in. I don't want to miss the trade. I don't want you guys to miss the trade because this is the perfect trade. So Nathan, what if you had a divergence and weak triggers? Which would make more sense, the very top or the bottom, even on a perfect trade? Why? Because you're losing momentum a little bit. Maybe it'll go deeper. It doesn't have to. So until you get the reps under your belt, don't trip over a couple pennies trying to save a few dollars. That's all the plan does for you. Good lesson there. Good lesson. Pete. Wow, that looks familiar. The momentum entry, get paid, out, comes back to the midband, in, comes back. Oh my gosh, Nathan, I couldn't have predicted this, right? He jumps the fudge in, and when he loses the momentum, gets the pullback for the perfect trend trade, he exits. Money in the bank. Then, I don't know why he did this one. He waited for confirmation. No need for confirmation on the perfect trade, but he took it, and he gets in, and then it just turns into another trend trade, so he gets in again. Absolutely beautiful trading, Pete. But Nathan, do you see how he did it? He knew that this was still rules-based, and all he did was add on to his position. That's experience. That's hard for new users to do. Because most of you get scared of this. Pete says, with momentum and path, I want to make more money. I'm cool adding on positions to this one. Great job, Pete. That was a good lesson. That was a timely lesson. All right, Papa, you ready? Oh, yeah. Man, nothing makes me happier than when you guys flood my room with pictures. What you're saying is, Mark, I'm serious about this. I want these lessons. I need to get good at this. Give me all the feedback. Huge mo on that one. With that look, experienced users don't get scared. That's the easiest way to say it. With this look on a large chart, experienced users will keep their stop where the market shouldn't go and taunt the market to come get them. All right, triggers down, room to trouble, pull back to the area, close below, perfect trade. Now you said you'd like feedback, so Papa, the feedback on this one is this is absolutely beautiful. It's a textbook trend trade. It's an amazing picture of what you can do with the software when you learn the rules. Let me throw it in the spreadsheet that everybody studies. So, Shush and Lucy, do you see it? The trend is down. There's a fight. There's a close below. There's resumption. This is your pattern. This is the pattern for TradingView. This is the one that sets you up to see so much more, and that is flawless execution. All right, triggers down. Path is clear. Triggers roll up. There's the fight. Close below has nowhere to go. So passed on the first pullback, didn't touch an area. You're right, it didn't. And you would have been trading into a zone. And look at that, saves your bacon. And then it pulls back to the midband. And it closes below. And there's nowhere to go. And there's nowhere to go, right, Papa? And you didn't take the trade. And it went anyway. But this could have done any of those things support do. This is great patience. This is believing that that one's coming, that that's how the easy money happens. And the hardest thing you guys will ever do is say, I'm just not going to take this trade. I think it's going to go down. My indicators say it's going to go down. Most of it says it's going down, but I'm not going to trade directly into an area because that area can send it up. And Papa, feedback on this one is outstanding job following your rules. Triggers are down, room to trouble, pulls back to the area. There's the close below, and guess what? It didn't work. Price pulled back to the resistance, yellow 1-to-1, saw the divergence line below, wanted to see how price was going to react. Price closed below the small triggers. Set stop loss, pivot high. Set target at the next zone using the other target. Price bounced off the divergence low as expected, got stopped out. It never made it to the divergence low. It just didn't work, Papa. You had the perfect look. It never even made that divergence low. It just didn't go. And at 7:35 p.m., Papa, that market is thin. Not everybody knows the rules like you do. And at 7:35 in the evening, man, 90% of the people that typically make the market move are at home with their families. So if you're going to trade in the evening, be careful. Stuff's not likely to follow through the way it does when the market is open and cranking. Triggers up, small triggers roll, pulls back to the area, closes above, room to trouble, got paid. Amen. There it is again. The perfect trend trade long. Out at the thing that could create a bounce. Papa, great job, dude. Your trading is so different than it was a month ago. Triggers up, room to trouble, pulls back to the area. It looks like it closes above, and it just doesn't work. Just doesn't work. Again, no, that's right before the entry or the open. I'd take that trade 100 times. I wouldn't hesitate to take that trade with you, Papa. It fits every rule perfect. And look at that entry, and that's not a lot of risk. It just doesn't work. That's hard to accept in the beginning. It's hard to accept that every trade won't work. But I followed the rules. Why didn't it win? Because trading is about probabilities. And then, Papa, there's the next perfect one. And sure enough, so you get in, you get stopped out, you keep your head in the game, and you get back in, and you make it all back. Great job. That is the difference between a new user and an experienced user. Back when I was younger, I used to race motorcycles, and they had a novice class and an expert class, Papa. And the difference between a novice and an expert wasn't lap times. It was the ability to recover when something went wrong. You enter the perfect entry. You got stopped out. The new user will sit and stew. The experienced user will say, hey, my rules are still met. The experienced user will say, hey, my rules are still met, and find a way. And that's great. That's your experience showing through. Triggers up, clear path, pull back to the area, close above, out at trouble, got paid. Guys, give me a Y in the room if you see how many times Papa has said got paid. What's the goal of trading, my friends? To get paid. That's it. It's to get paid. You don't have to make $1 million every trade. Oh, let's see. Triggers up. Price pulls back. That's hard to tell if that was an up or a down bar, Papa. In the moment, that's hard to tell if that was an up or a down bar. If it was a down bar, rules weren't met. If it was an up bar, good to go. Either way, small risk, just didn't work. I'm going to talk to John Novak about a definitive way. Actually, the fact that it gave you the down signal, it was an up bar. Yeah, it worked. It worked. Boaz, you're gifted. You can look at different platforms and do well. You and John Novak are both good at that. I'm no good at it. Papa, this is the one that I showed in the room earlier. It's the perfect short trade, and you knew exactly where it could create a bounce, and you managed that so great. Beautiful job. So let's see. Winner, no trade. Good loser. Or no, that was a winner. Nope, that was a loser. 50%, right? There's a winner, 66%. Price pulled back, didn't work, so now we're hovering at 50%. 6 trades, we're at 60% winners. We're at 75% winners, maybe 60% winners. About 75% winners. I suck at math, but does that seem about right? 2, 3, 4, 5, 6, 7, 8, 9. 9 trades, 6 winners, 3 losers. Could you build a career off of those numbers? Could you build a career off of those numbers? I feel like you could. Great job, Papa. 3 divergences is definitely a termination. Good read, Nathan. Good read. Man, good loss, Aaron. 3 triggers through. What's the one part missing? What's the one part missing, Aaron? Down here, what was your heads up? Strong bottom. That's the only thing I could see that is even the least bit problematic with this trade. Entry makes sense. Stop makes sense. Momentum is amazing. 3 triggers through. The only thing is the strong bottom. And I don't even know that it would have made a difference. It just didn't work. So, I mean, nice job. That's why I said I don't know that it would. Were you not in front of the computer for this one? You were? So why didn't you take this one? Oh, you did. Awesome. Good job. Good job. Good job. Yeah, no. This far ended, it's the potential to break in the perfect scenario. And it just didn't work. All right, Nathan, I'm still having confusion on when price almost touches a fib, but can still behave as a termination. Anytime it gets within 4 ticks of a fib, I can treat it as having reached that termination. If that's what you choose to do, Nathan, yes. So Nathan, let me remind you that you needed an exact number, and I don't have one. So collectively, we decided, and you made the choice, that 4 was your number. Anything less than 4, you would consider it hit, right? Okay, so then I can use a scenario where price stopped short as a good top or bottom in the live trade we took. Price was 3 ticks away from the term, but it was still classified as a, sure, if that's your rule, you can call it a strong bottom. See how that works? You're following your rules, not mine. So let's do this, Nathan. That area never broke, right? I just want to make sure that area never broke. That one is in the let's see what happens phase. It's just got to be a judgment call. Well, the basics have nothing to do with 4 ticks away. Here's the basics. That's your basics. That's it. There is absolutely no gray area in the way I teach. Price reaches an area. Period. That's it. If it doesn't reach, it's not a termination. It's almost too simple, right, Nathan? But you weren't okay with that because of how fibs are made. So you had to pick a number. So this is Nathan's rule. This is a made-up rule. This is Nathan's made-up rule. Because the ambiguity of tens of thousands of calculations don't appeal to your need for exactness. So you created a number. It's your number. It's not mine. Does that make sense? It's okay. Don't call it my rule. It's Nexgen's rule. How do we define a termination? What's the recipe? What's the language? What's the verbiage? It all starts with price reaches. That's it. It all starts with price reaches. So Nathan, anything that you choose to do outside of price reaches doesn't fit. Isn't that very black and white? Isn't that very no wiggle room? Isn't that very 100%? Nathan, this is what we do for brand new users that don't have the ability to read their indicators and make decisions in the moment. That's it. We keep it super focused. So if that's what you want, that's your rule. Stop asking me for ways around it. Because what happens is I give you the exact rule, right? The exact rule is that price reaches an area. But your brain, and I love your brain and the way it works, your brain says, but it's close. But what's the exact rule? Well, it's not separation, but it's close. But what's the exact rule? No, not perfect. What do the rules say? What do the rules say? Guys, I'm telling you right now, there's 25 million ways to look at the market. 25 million ways to analyze it. 25 million ways. So my rules say, if I have separation, I have strength. If price has not reached an area, that area is a target. If all of my triggers are below the previous area, I have a clear path. The midband's only a termination if the large triggers are full bar away, which means that when it pulls back to this area, Nathan, 3 divergences in the same price range is a termination condition. It's not your trade, right? That's it. But I didn't say it was close, let me gauge. I didn't say maybe it's not wide enough, let me gauge. I didn't say, well, it's 3 divergences, but I think it's going to go down. I kept it very black and white. First it's momentum, then it's path. That's my deal breaker, plain and simple. First it's momentum, then it's path. That's my perfect trade. Why? Ifs and buts confuse the shit out of us, man. Ifs and buts are confusing. Ambiguity is confusing. There you go. You want to follow the rules. That's it. You're welcome. It's crazy, isn't it? It's crazy how our brains want to make something out of everything. Both lines of the small triggers didn't get through. It reversed the market. Is it a strong bottom, Nathan? Yes, because it fits the rules. Now check this out. Hold on. Let me get it before it does it. Price has reached a midband. Look at those large triggers below the reversal bar in the moment. Is the midband a termination? Yes. What does that mean? It means anything you do between here and here is likely to kick the ever-loving crap out of you. Pretty cool, right? There's no room for wiggle. We create the wiggle because the wiggle gets us into trades. We use the phrase but because but gets us into trades. We use the phrase it should because it should gets us into trades. And that's where traders hurt themselves. So Lucy and Shush, in the very beginning, don't burden yourself with all that could be. Let it be very precise. Miss Michelle G, in the beginning, don't burden yourself with all the options. Simply say, my rules are met or they're not. Let's see if they close the gap to those triggers. That's the gap theory that we're talking about. Let's see if they make it. I hope they do. Oh, I'm sorry you're having computer. It's that darn Mac. Let's get you on Windows, Lucy. I'm just kidding. Mac users love their computers. Which is why I know to poke the bear a little bit. I had a Mac for a long time. I traded a tattoo for it. It was cool. But I didn't do anything on computers. There we go. Nathan, why don't we take trades into a midband when the large triggers are a full bar away? Isn't that amazing? Look what it did right back to them. It's into a termination. Rule number 2 is not met. Great job, dude. But that's just a pattern. It's just a pattern that repeats itself all the time. Me too. Michelle, there's a time to show your butt. Trading is not it. How do I enter my trade? With the rules met, Miss Lucy. Just kidding. Let's go back. So just like a little how-to on... So I'm going to go through. So let's say, oh, show your trade? Okay. Hold on. Where's my little thing? Like to show it on, oh, well, you have to take a picture of it first. Okay, so you know what you can do on TradingView as well, Lucy, which is pretty cool, is you can use this camera up top and take a snapshot, and you can copy the image and you can paste it into the room just like that. Or what you can do is whatever picture you took, right click on it and copy it from whatever you use to capture, and then just paste that in the room. So just copy paste, good old copy paste, like you're plagiarizing from Cliff Notes. Yeah, right into the chat box. Right here. Just draw. So you're going to right click and paste. Bonk. It really is that easy. Oh, there she goes. Let me get Boaz real quick, and then I got you. Boaz, perfect. Triggers are up. Room to trouble. Pull back to the area. Close above. Money, money. Should I go into market flow? Do you need to go into market flow to take this perfect trade, Boaz? Then why bother, right? Why bother? I don't care what specials McDonald's is running when I'm going to Burger King for a Whopper. It is taking care of my needs. Great trade. Oh, Miss Lucy. So the triggers were up. Did you have room to trouble? 64? Yeah, you did. You had all the room to trouble. You waited for the pullback. You get in above the triggers, and you make enough money to buy me something pretty for Christmas. Congratulations, Lucy. You understand the pattern. It took you a week. Well, this is the first time I'm seeing it. That's it. I couldn't do anything better. It almost seems too easy, doesn't it? Once you get the language down a little bit, it's almost like there's not enough moving parts. But there really is. Great job. Outstanding. This is where I have my proud papa moment. Of course you do. Lucy, are you an A-type? Like, if I learn something, I better be perfect at it on day one? My wife is. My wife is brilliant. My wife was pissed off that getting her MBA took her 6 months and not the 3 she anticipated. That's my wife. And most traders seem to bring that to the table. If there's 1,000 pages of knowledge, I need to understand 1,005 by day 2. Oh my gosh, I want to see your dodos. Unless that's weird. I want to see your mistakes, Lucy. Can I show you why I want to see your mistakes? And mistakes are so hard to post. And imagine being me, Mark Novak, the brother of the guy that wrote the software. And I'm watching classes and I'm doing my best and I'm getting my ass kicked and I don't want to post it. So what happens is if you took, I'm just going to go through like scenarios, right? If you took the entry right there and get stopped out, and Lucy, I bet you a nickel you've done it, where you take that entry that didn't quite close above, you take that entry that didn't make it to the area. Lucy, your brain might say, whoops, that's a big font. Lucy says, the market is stupid, that was perfect, right? And now you're feeling a little put out and a little dejected and a little sad that you had the perfect trade and the market had the audacity to not give you the perfect result. So Lucy, if you hide this from me, you live in this lie. And we've all done it. But what happens is if you show me this loser, what you've done is you've opened the door for me to show you the correct entry. You give me the ability to talk about the whys. You give me the ability to show you the correct entry and to show you where that market was likely to go with those advantages. And if you never show me this, Lucy, you're doomed to repeat it over and over and to believe that the market sucks and that Nexgen sucks and that the methodology sucks. And it's not that it sucks. You were just a couple ticks too early. So don't hide your losers. I had a manager when I first started management. He told me, and you know what? I'm going to mute. I'm going to mute so that there's no record of this. But the truth was that there was no mistake I could make that he couldn't teach me how to fix and make me a better manager for it. And that's the hardest thing to do. The first photo is the hardest. You want to know the truth, Lucy? Is your first photo? Here's a little insight into my brain. Your first photo was a picture of a divergence high asking me what that line was. You'd already put a picture in. But there wasn't any risk of loss or being wrong, so it was easy for you and you don't even remember it. This is your second photo. I don't forget things. It's going to annoy the hell out of you eventually. But I just don't forget stuff. This is so perfect. Have you heard me beat everybody up in the room? You're welcome. I don't give advice though. I refuse. Have you heard me just tongue lash and ridicule anybody in the room yet? I hope not. I try not to do it. Trading's hard. And I don't need to be an asshole to make you a better trader. I don't want to be. There we go. I like that better. Trading advice gets me in trouble with the CFTC. I don't ever give advice. I talk about chart reads, I recognize challenges and how to do it better. And then my favorite part is I celebrate the hell out of victories when they're present. And that's exactly what this is. Watch this. I'm going to steal it and I'm going to take it to the spreadsheet that I give everybody. And we're going to call this Lucy's Perfect Trend Trade First Weekend. Has nothing to do with experience. It's just a pattern. Great job. And everybody learns differently too. Everybody learns differently. So I've got to know what your love language is with trading, right? Odds favorable, 4 triggers through. You're trying to pull a fast one here, Nathan, right? I know that mid band was 4 or 5 ticks above you. And I know it didn't get anywhere near. You didn't take this trade, did you? So remember how everything moves and the mid band comes down as it pulls up? No way that was ever close enough. But you're right, that's the pattern. Good job. Now here's the question. Are you ready? When you're in the KISS plan, it's $100 and $200, right? Nathan, what if that fib that could stop the market completely is less than $200 away? Do you hope it breaks? Okay, so in the beginning, it either gets there or it doesn't, right? It either gets there or it doesn't. So Nathan, this is one thing that I need you to understand. Putting your target below a fib is freaking ridiculous because a fib can stop the market to the tick and send it the other way. The KISS plan is good. You got nothing to lose, right? Well, Nathan, the goal isn't that you trade the KISS plan forever, that eventually you make good decisions based on your ability to read the indicators. So in the beginning, this is perfect. Don't change a thing. Stick to your plan and let it be black and white. I want you to believe that there's going to be a time in your life where getting paid at the area makes more sense. Paul, you're welcome, man. Have a good one. Because while it doesn't always happen, these areas have been known to stop the market to the tick. Look at this, guys. We have momentum. Not again. We have momentum. We have a clear path. We have an area inside of triggers. You guys want to see if we get a trend trade? Does it fit the rules? Are my triggers strong? What do you guys think? I need you to be the cops here. Should I even have that order in place? Do I have strong triggers? I'm not calling trades. I'm following rules. Yes. Do I have a clear path? Yes, Alessandro, you're the only one looking out for me. Do I have an area inside of triggers? What do you guys think? Do I have an area inside of triggers? You better hurry before they come down and I break rules. Somebody. Anybody. That's what I needed, Alessandro. That's what I needed to hear. You said no. So, Alessandro, this is why we answer questions in the room. Buy a pullback. That's a little push down. At an area. It can be a fib. It can be a mid band. It can be a yellow 1-to-1. Inside of triggers. I'm missing letters. Triggers. So, Alessandro, man, thank you so much. I owe you a beer if we ever meet. Here's my triggers. From the top to the bottom. Trigger lines define where the retracement is most likely to happen if we get a pullback. Does that make sense, everybody? Alessandro, do you see that mid band right inside of that retracement zone? Some would call it an area inside of triggers. Watch what happens if I kill the retracement zone and put that box around the area inside of triggers. That is the magic of the methodology. It means that I don't enter up here because it's not an area inside of triggers. I don't enter up here because it's not an area inside of triggers. I don't enter down here because it's not an area inside of triggers. I have one spot that fits the bill. One spot that's an area inside of triggers, and that's the only spot my high probability trend trade comes from. So if you learn that phrase, Alessandro, you don't jump in hoping that it goes, and you don't wait for the blue line below because you don't want to have too much risk. Does that make sense, everybody? I love the language. Love the language. Because the language, it's so good. It's so specific. And if they hit that pink line within the big triggers, absolutely shush. But shush, remember, you're on TradingView, right? This methodology has nothing to do with your platform. This is a completely different platform with completely different ways to go after this trade. Oh, you have both. My apologies. So absolutely, inside of the large triggers. Large triggers are moving averages. And one of the things about moving averages, is that price returns to them the same way it did right there, the same way it did here. But since there are moving averages on the large chart and there's moving averages, on the small chart, these moving averages work together to define where the retracement is most likely to go. It's called regression of the mean, I'm told, which means that price returns to these large triggers. So we use them to define where the retracement is most likely to occur. And then we use the areas within to define where the market is most likely to bounce. Nathan, if the reversal bar dissects these one-to-ones, that's not my bouncy point. That's not my trend trade. That's where we go to the mid-band. Does that make sense, Shush? So because it's already gotten below, I'm looking for the mid-band. Awesome. The smalls are used in comparison to the large to define momentum. And then the large will help us define where the retracement's going so we can get the accurate entry. And since it's an area inside of triggers, we did get a fib update because it's noon. So technically that's not a clear path anymore. That's how we'll pinpoint right where the market is most likely to bounce and continue with the large chart advantages. Well, so Alessandro, do you see how every trigger is above Fibonacci support? So Fibonacci support is in the rear view mirror. Doesn't have any impact on going up anymore because all the triggers are above it. Do you see how price hasn't yet reached the next areas? Those areas are targets, which means that right now, in the moment, we have both momentum and clear path. Does that make sense? So there's two spots that clear path can come from. Let me find a picture real quick. I love it, guys. This is how we get better. This is how we get smarter. Exactly. The large chart defines direction. It defines the momentum. It defines any areas that can be problematic. The small chart's just an entry. That's all it is. This is a 13.2. This is a 5.1. Inside of this one bar, all of this happens to produce an entry. Does that make sense? So when this bar is all the way down here, that's where the retracement starts. The top of this bar is the bounce off the area inside of triggers. So by using this chart, we can reduce risk. So Alessandro, two ways to get a clear path. The first path is what you were talking about, when all four triggers break through. We call this a breakout of Fibonacci. The other way you can get it is if the market reverses and simply hasn't reached the next area. And that's what we just saw on the ES, is the market reverses and they haven't made the next area. And they've already gotten away from the previous area. That's your clear path. Does that make sense? So either from a reversal or from a breakout. That's the four triggers. And then when it reverses, see how this bar hasn't reached anything yet? The triggers aren't fighting this anymore. That's a clear path. That's a beautiful short trade. That's a beautiful long trade. That's a beautiful short trade. And notice that we're not trading into trouble. We're trading to trouble. And we're not trading into trouble. We're trading to trouble. And that's kind of how you keep it easy. Pinpoint those entries on the smaller, faster chart. Easiest money you'll ever make, guys. Good stuff. We made it to the end and then some, which I love. Means you guys are paying attention.